standing by this podium. I feel like it's as tall as me, but can you guys see me? Can you see me clearly? Right. We're about to start with the program real quick, but before we do, we are just going to just watch this brief health and safety video by the JSC. If you can kindly indulge us with your patience a little further.
A warm welcome to the JSE. Please do pay attention to the following important health and safety procedures that will ensure your safety while visiting the JSE. The building is fully monitored by a fire and smoke alarm detection system. That means the entire JSE building, including the basement parking and deck area, which you will find outside the JSE's entertainment area at the back of the building, is a no smoking zone. A lovely smoking area with couches and other seating has been created at the southeast end of the building, next to the deck. We have an ER24 medic and trained fire teams on site who will respond to all emergencies. In the event of an evacuation, please calmly follow the running exit main signs located throughout the premises and exit the building. Our concierge, help desk staff, and security will help guide you outside the building where you will be directed to an assembly point. Once at the assembly point, please participate in our roll call and remain outside the building until instructed otherwise. The same safety protocols will apply when evacuating from the basement parking area. Please note that if an evacuation occurs, you will not be allowed back into the basement parking or the building. To retrieve your vehicle from the underground parking, await instruction from the emergency controller confirming the building's safety. Bathroom facilities are located on the left and right side of the help desk area and are clearly marked. Thank you for listening to the safety briefing as we continuously ensure your health and safety while at the JSE.
Perfect. Let's get going. Good morning once again. My name is Fifi Peters, and I am delighted to be spending the morning with you at the session today. A happy Women's Month to all the ladies in the room. Yay. Yay. Happy Women's Month to you. We have a new government, of course, in the country. We all know they are bringing together a new way of doing things, they say, but I feel like there's certain old things that still remain, such as observing protocol, which I'd like to do right now by acknowledging them. And beginning with the Honorable Deputy Minister of Finance, Deputy Minister Asho Sarapin. Good morning, sir. Also, the Honorable Deputy Minister of Electricity and Energy, Deputy Minister Samantha Graham. Good morning, ma'am. In the room today, we also have Dr. Crispin Olver, the Executive Director for the Presidential Climate Commission, who have convened this event today. Ms. Leila Fourie, the CEO of the JSC, Presidential Climate Commissioners, Commissioner Shamini Harrington as well, and we could have some other individuals joining us, and we'll acknowledge them should that time arise. I had an introduction prepared for you, but I am going to quickly surpass it because I think that many of the things that I had prepared to say will be mentioned throughout the various speakers today. I'm going to move quickly because the lady who has invited us into her corporate home today told me that there's a board meeting that's coming up. And ordinarily I'd say, okay, but you know, you're here. But after yesterday's whiplashing and sell-off on the markets, I think I can understand the importance of the agenda. Those of you who do check the markets will probably be comforted in seeing the recovery that we are seeing today. I see futures are also pointing to a slightly firmer open, so we should have a better day today. So without further ado, ladies and gentlemen, can we please welcome on stage Ms. Leila Fourie, who will be giving us the official welcome address.
Good morning, everybody. It's absolutely wonderful to be able to chat to you on this very crisp winter's day. And indeed, we've all had quite a bit of whiplash. I'm not sure if you saw what happened on the Nikkei, which is the sort of early morning indicators of what's happening. But yesterday they were down 12%. the worst single day loss since 1987. And today they're up 5%. So there's a lot of herd mentality going on. And interesting, even though the emerging markets index was down 4%, the JSE was only down by just over 1%. So we've fared relatively well. And I wanted to apologize before I started speaking that unfortunately I have to take my leave after this just for our board meeting. We are announcing results tomorrow. And I was hoping that this would fall on a different day so that I could be here to really listen to everything. But I will certainly listen to the recordings and the summaries of what's come out. So we are very, very grateful to have the Deputy Minister of Energy and Electricity, or Electricity and Energy, Honourable Samantha Graham. Thank you so much for coming. And the Deputy Minister of Finance, Honourable Ashore Sarupen, and we're very pleased to have you both here. I also want to thank Shamini Harrington, the Commissioner and Vice President of Climate Change, Steve Nichols, and the Head of the Mitigation of the Climate Commission for hosting us here today at this financing roundtable for infrastructure. And of course, I want to welcome Dr. Crispian Ulver, the PCC Executive Director. It's absolutely wonderful to have you here today. And it's really good to see all of you here in the audience. This is a very important subject at an important time for the world and for our country. This roundtable discussion is going to build on the work that began last year during the South African Transmission Financing Seminar. I know Shakira is somewhere in the audience and she was central in organizing that. I don't know where, can't see in the dark, there you are. And this was held with the Ministry of Electricity and Energy last year, September, where we had experts and stakeholders share their views and insights on how we can finance the development of our natural electricity transmission to guarantee sustainable energy security. Last year's engagement left us with a great sense of optimism because of the depth of the conversations and the genuine connections that were made. I hope that we will see the same kind of debate and discussion today, as well as the forging of the all-important public-private relationships, which are so vital to any endeavor, but particularly one as important as this. There have been some pivotal initiatives championing the drive towards a just transition and the guarantee of our national energy security. One of the key factors in this regard is the Climate Change Act. The legislation sets out both South Africa's strategy for a low carbon and climate resilient future, as well as the targets that we must meet in our transition to a lower economy. The electricity regulation amendment, or the ERA bill, which awaits the president's signature, will allow the long-promised unbundling of Eskom into 3 separate entities: generation, transmission, and of course, distribution. This bill will create a liberalized energy market, allowing the independent power producers to compete fairly with Eskom in power generation. The creation of the Government of National Unity following the general elections in May has provided a new impetus for development. This has been accompanied by increased investor interest, which I was talking to the ministers about, the deputy ministers about earlier. And this is absolutely critical. And this is where the JSE can and will play a vital role. Ever since gold was discovered right here on the Witwatersrand, the Johannesburg Stock Exchange has played a role in raising funds that made deep level mining possible, and then the industrialization of the South African economy to support it. We've been midwives to every significant economic moment in this country's history. We've been a port of first resort for international investment, and we've been a very useful conduit for capital into the continent. The JSE has also played a vital role in bringing public and private sector together for the good of all. We have a very proud history stretching over the last 136 years, but perhaps our most important contribution is how we will help to shape the future. The JSE is a hub of innovation, and we've funded it and we've practiced it. It's not enough to be future fit. We must ensure that we contribute to South Africa developing its own economically and environmentally sustainable future, one that is equitable and just for everybody that calls this country their home. As such, we were in the vanguard of the UN's Global Investors for Sustainable Development, or GISD Alliance, and a founder member of the UN Sustainable Stock Exchanges Initiative. We were the first exchange in the world to establish a sustainability index, ranking companies based on environmental, social, and governance criteria. We launched our green bond segment in 2017, which expanded into a fully fledged sustainable segment in 2020. And that segment has grown, it's more than doubled every year for a number of years now. Today, the segment has 78 listed sustainability bonds with a market capitalization exceeding 54 billion rand. There are 8 ESG ETFs listed on the bourse. We pride ourselves on leading by doing, both here and at home and across Africa. And today is another important milestone. None of us need reminding of the impact of the extreme weather events. And we see the flooding and the destruction of infrastructure along the KZN East Coast, and of course also the perilously high temperatures creeping towards us in the Northern Cape hinterland. Our society is already vulnerable. We know that climate change exacts an even heavier toll on those who can least resist it. We must lower our greenhouse gases by transforming our economy, but no sector can do it on their own. Robert Swan put it much more eloquently than I when he said, the planet's threat, the greatest threat to our planet is the belief that someone else will save it. We must work together as the public and private sectors, which is today so vitally important. Thank you again so much for joining us, and I hope you have a productive and constructive day.
And thanks so much to Leila. Have a successful board meeting as well. So I was reflecting on today, and I was just looking at what was trending in the headlines yesterday. Many of you would have seen the news around Eskom and the energy regulator, Eskom not necessarily getting its way regarding the allocation of a grid capacity that it was looking for, that it believed could help it, keep the lights on and keep things moving. I know that the story's not over. I'm sure there'll be a few back and forth happening, but I reflected on how it actually speaks to the bigger picture, the bigger challenge that we're trying to solve for today in funding this transmission infrastructure, the massive rollout that we want and we need to keep the lights on. It's been 132 days that the lights have been consistently on for those of you who are counting, but also to help us successfully transition into this new green dawn, as it were, in a manner, as Leila said, that leaves no one behind. I'm also not ignorant of the fact that outside of the speakers that you're going to be hearing from today, presentations, there's going to be a panel discussion, all experts in the field who are going to be shedding their light and providing their insights on how best things can be done. I'm not ignorant of the fact that I am in a room full of experts as well. As I came in, I looked at all the name badges and the guest list of the individuals who are here, and I said, oh, wow, okay, these are people who know something. And so what I would like to do is to invite you to contribute the something or some things that you do know on top of what is shared throughout the speaker sessions and the panel discussions. Contribute your comments and also your questions, if you do have any. I do know that the team at the Presidential Climate Commission will welcome them. It will certainly inform some of the research that they're doing in guiding this government and the country on going about things in the correct manner. So I'll park my words for there, or park my words now, for now, and introduce you to our next speaker, who will unpack in greater detail the purpose of this workshop, and I also believe some of the outcomes that they're hoping to achieve. Commissioner Shamini Harrington, who's the Vice President of Climate Change over at SASL. Over to you.
Hey, good morning, everyone. I think this is a bit high, but there we go. All right. So, here we go. Let's move this down here. All right. So Honorable Deputy Minister of Finance, Mr. Ashur Sropin, and Honorable Deputy Minister of Energy and Electricity, Ms. Samantha Graham, distinguished guests, ladies and gentlemen, good morning. I extend a warm welcome to today's discussion on finance models for grid infrastructure. I'd like to start by acknowledging the esteemed captains of industry present here and express my gratitude for leadership and expertise that I'm hoping you're going to share. As we gather here today, energy security issues are top of mind for millions of South Africans. Our grid infrastructure is not just struggling to keep up with demand, it's also holding us back from achieving our economic potential. Today, we are here to discuss a recent PCC study on the structural reforms needed in the power sector from a financing, energy security, and climate mitigation perspective. This roundtable builds on previous engagements hosted in collaboration with the JSE by the Ministry of Electricity, now the Department of Electricity and Energy, on transmission financing mechanisms. As was said, there has been a significant amount of work leading up to this point. Several studies conducted by government, finance, academia, and experts groups, as well as numerous engagements held on the state of transmission infrastructure and country funding requirements and capacity to implement. Thank you to all the program participants for availing themselves. We look forward to great discussions and inputs that will move the dial forward towards implementation. The issue of implementation is critical because history has shown us that the country has great policies, but challenges when it comes to implementation. The expansion of transmission infrastructure at a pace and scale that the country can afford is important to ensure long-term energy security, especially in a low-carbon economy. Financing grid infrastructure will require mobilizing substantial private capital to build, maintain, and upgrade the electricity transmission networks. It is therefore crucial that grid infrastructure financing models demonstrate an in-depth understanding of the techno-economic characteristics of power transmission networks that must be resolved whilst ensuring broader public interests are served. This exercise will require collaborative efforts across the board. It is why we are here today. The objectives of the roundtable are fourfold. First, we want you to explore alternative approaches to ownership operation and financing of transmission infrastructure in the power sector. We want you to examine regulatory governance and financing issues in relation to transmission infrastructure delivery mechanisms. Third, we want to understand how ITP models fit into overall grid management and transmission rollout. And last but not least, to facilitate consensus and steer direction towards the rollout of transmission infrastructure at the pace and scale that is required. So in closing, we are all in this room to enhance collaboration and alignment among stakeholders so that we can move the dial towards implementation in a just manner. The character of this event is about information sharing and discussions. We want it to be open and frank, and we want to encourage collaboration so that we as the PCC can clearly map out the challenges, opportunities, and the way forward. With that, I would like to introduce our two speakers. I'd like to invite them up onto the stage. The first that's going to speak is Mr. Ashur Sarupin, the Deputy Minister of Finance. Mr. Sarupin was appointed as the second Deputy Minister of Finance from 3rd July 2024. He is the first Deputy Chairperson of the Democratic Alliance Federal Council. Mr. Sarupin attended Wits University, where he completed his Bachelor of Science degree and many other degrees, just to mention some of them: Bachelor of Science Honors, Master of Business Administration, and Master of Philosophy in Corporate Strategy at the Gordon Institute of Business Science. In 2020, he was elected into the DA's national leadership as the Deputy Chairperson of the Federal Council. And since 2019, Mr. Sarupin has served as Member of Parliament and the DA's Shadow Minister on the Appropriations Committee. It deals with the national budget. And second, I'd like to invite Ms. Samantha Graham onto stage. She will speak second. She's the Deputy Minister of Electricity and Energy. Ms. Graham was appointed as Deputy Minister also from the 3rd of July 2024. She has been a Member of Parliament since 2019. Her dedication to public service and her commitment to addressing the needs of her constituents have been evident throughout her tenure. From 2014 to 2016, she also held the position of constituency chairperson for the Dr. Beyers Naudé local municipality. She has a Bachelor of Laws degree from the University of South Africa, reflecting her commitment to continuous learning and her dedication to enhancing her legal expertise. Ms. Graham entered politics with a clear mission: to be the voice for those who could not speak for themselves. Her election to Parliament gave her a broader and more influential platform to campaign for the marginalized, particularly those affected by poverty, a lack of education, and limited opportunities. I would like to now invite you both on stage. I'm not going to disturb you all any further, so I'm going to allow each of you to speak in order, and then I will come back to give you both a thanks. Thank you.
There we go. You're not the only one to have dropped something from this podium. Good morning, everybody. It's good to be here at the JSE. I have just returned from Abuja, Nigeria, from the African Caucus, the World Bank, and IMF, and there's several lessons I've picked up on from there that are quite important for what we're going to be discussing today that I'm going to hone in on. And the first is something that is critically important for the overall topic of climate change and mitigation and investment in South Africa, and that is CBAM, or the Carbon Border Adjustment Mechanism. For those of you unfamiliar with this, it is proposed by the European Union that is aimed at addressing carbon leakage and promoting global efforts to reduce greenhouse gas emissions. But its primary efforts really is to make sure that EU industries are given a level playing field for environmental sustainability by effectively creating non-tariff barriers for emerging markets to export goods into the European Union. And when you look at the Eurozone overall, it is our largest trading partner. So we must be very, very cognizant of what's going on there. And it poses significant risks and negative impacts for countries like South Africa. And one of the most immediate risks and impacts is our ability to export to our largest overall trading partner. We're a major exporter of goods such as steel, aluminium, and other carbon-intensive products to the EU. And under CBAM, we will face non-tariff barriers with much additional costs if we do not meet those stringent carbon emission standards. These added expenses will make South African goods less expensive. My apologies, will make them more expensive and less competitive in the European markets. And if we do not move with speed to decarbonize, will result in a potential decline of South African exports that will further negatively affect our trade balance. CBAM will also impact our industrial sector more broadly negatively, as we have many industries heavily reliant on carbon-intensive processes, and these will face additional costs. They'll either need to pay for their carbon emissions or invest in cleaner technologies. And these costs will result in decreased profitability, job losses, and a slowdown in industrial growth, which we can scant afford when we consider our unemployment crisis. For a country where we are trying to industrialize further, these impacts will be substantial. Our energy sector, as we know, is predominantly coal-based and will be adversely affected by CBAM. Our reliance on coal for electricity generation makes us one of the largest polluters in the world. I think we're the 25th highest polluter in spite of the size of our economy, and making this energy-intensive process vulnerable to CBAM-related costs. So transitioning to cleaner energy sources is not only morally right and economically important, but for our ability to grow this economy now becomes a time-bound issue, and it will further strain our country's resources. And the energy transitions that are required will lead to disruptions in energy supply and increased energy costs, which will have its own effects. But of course, there'll be broader issues with CBAM for South Africa. As I said, job losses being a key one if we do not move with haste, which will trigger further social issues in our country. We will see higher cost of living issues with CBAM as well, again, unless we can transition quickly. And these will contribute to increased social inequality and heighten economic and social stress. Now, CBAM more broadly could, of course, trigger other issues globally. We could see more trade tensions between the United States and some of its partners, and China and some of its partners, and of course, retaliatory measures between these countries. And these tariffs and trade barriers could further harm South African exports and strain diplomatic relations at a time of heightened global tensions. And we might find ourselves in quite a challenging position as a result. So what do we need to do? Firstly, we need to understand what the problem is to get renewable energy onto our grid. And it remains a fact that because of our developmental path, our transmission infrastructure was designed to transmit energy from the northeast of the country, where there's lots of coal and lots of coal-fired power stations, to the southwest. Our renewable energy potential and our other resources to make sure that we can get renewable energy onto the grid sits ironically in the southwest, which means we need a massive investment in renewable energy transmission infrastructure. And our current infrastructure is not fit for purpose. That is a fact. And ensuring that we have robust and reliable transmission infrastructure now becomes critical, both for economic development and energy security, but also by 2030 for our ability to maintain a competitive economy. And we're not the only ones dealing with this. It is an issue that's now coming up across the African continent, as we discussed this weekend in Abuja. And governments worldwide are grappling with the same issue of upgrading and expanding their transmission networks. And in South Africa, we have limited fiscal space. Years of bailouts mean that we do not have the fiscal space to do the traditional thing, and that is throw public sector resources at transmission, which has a very long payback period. And we know the NPV calculations there mean that it is one of those things that will require public-private partnerships to get done. So we've got to look at how we can de-risk investment into the transmission grid. And there is a substantial number of opportunities in my discussions with the World Bank and IMF. And I've brought to their attention that we do need private sector capital participation and mobilization to bridge this financing gap and mobilize capital resources that our government does not have. This is important because we have limited fiscal space. And we know that the private sector will bring high levels of efficiency and innovation to the execution of any expansion of the transmission infrastructure. And this may well lead to cost-effective solutions, timely project completion, and the adoption of more cutting-edge technologies. And of course, we can then share some of the risk because the private sector allows for risk sharing between public and private entities. But we must consider de-risking, because de-risking is going to be absolutely crucial when you consider the payback periods on transmission infrastructure. And there are various mechanisms available from various development banks to enable this that we now need to make sure we can bring in as part of the partnership process. And the developmental finance institutions like the World Bank, IFC, or International Finance Corporation, the BRICS Bank, the African Development Bank, have these various instruments at play. And one of them, of course, are guarantees and risk mitigation instruments, which now enable the private sector to get protection against specific risks, such as political instability, regulatory changes, and currency fluctuations. These guarantees will help enhance investor confidence and reduce the perceived risks associated with investing in transmission infrastructure. The second, and the one I'm pushing quite hard on, is blended finance, because this, of course, will enable us to access concessionary funds from the DFIs with commercial capital from private investors. This approach will hopefully lower the overall cost of capital and make our transmission projects more financially viable. And by leveraging concession funding, we can get these DFIs to catalyze private sector investment. Of course, there's a tremendous amount of technical assistance and capacity building available from DFIs to public sector entities and to the private sector to create the enabling environment for investment by improving regulatory frameworks, strengthening institutional capacities, and of course, getting those projects prepared and implemented, and implementation remains the gap always in South Africa. And of course, lastly, equity and debt financing is going to be critically important. And DFIs can invest directly in these transmission projects through equity and debt financing, and it's up to us to create the necessary instruments here. But their involvement as equity partners can enhance project credibility and attract additional private investments. And we can get longer-term, low-cost debt financing that will align with the financial needs of our infrastructure projects. So I just want to then touch on a critical case study that I've come across this weekend, and that was the African Development Bank has a partnership with Power Africa that aims to enhance electricity access and reliability across the continent by mobilizing private sector investments, particularly in transmission projects. And the AFDB provides a combination of risk guarantees, technical assistance, and blended finance to unlock private sector participation. And across the continent, it has unlocked huge amounts of private investment that has resulted in the development of vital transmission infrastructure and improved energy access for millions of people in the continent, where many people are now getting electricity for the very first time. So as I conclude, you'll be happy to know some politicians can be succinct. I think that we've now reached a point where, due to the lack of fiscal space and because of the bailouts, we have no choice. The private sector is a critical partner in getting transmission infrastructure fixed. And I think that for the private sector, we've got to put heads together on how we can leverage the Global Development Finance Institute finance to de-risk investment so that together we can employ the necessary strategies to meet our energy demands, ensure sustainable development, and mitigate risks such as CBAMs. And I'm hoping that we can get mechanisms like public-private partnerships, build operation and transfer models, and concession financing off the ground so that by 2030, we are not having a discussion about trying to ask the European Union for a favor. Thank you very much.
Good morning, everybody. It's very tempting just to say what he said. I'm not a finance person, so I'm very glad he's touched on all the financial aspects of it, because I cannot speak with any authority on some of those vehicles that you discussed. What I am here to talk about is electricity and energy. And today's roundtable is in the context of an ongoing energy crisis. With the lack of load shedding, it's very tempting to believe that we are out of the energy crisis and everything is back to being hunky-dory. Unfortunately, we know that's not the case. And unless we address the transmission issue, this energy crisis is going to worsen. So the bottom line is that we need grid infrastructure, and we need it at speed, at scale, and with agility. So today's roundtable is a follow-on from a series of conversations that have been had, including a transmission funding seminar that was mentioned earlier, that brought together multiple experts, stakeholders, and other from around the world and locally to interrogate potential models for the development of our transmission infrastructure. Our hope is that this is the last discussion around models and that our next engagement is focused on implementation. We don't have time anymore. This level of reform was already underway in the 90s in Latin America, and we're already 3 years behind Kenya, and Uganda is also moving at speed. We should be leading on the African continent, not following. And while we're still discussing models, the NTCSA is continuing to drag its heels and to keep on working on their own outdated model, which has severe limitations. Not least of this is the 7 to 10 year delivery date. We don't have time. We need transmission infrastructure to be delivered at 8 times the current pace. We also know that we need money, a cool 390 billion rand, and we need it soon. Lead times are long for development, and we need to procure as soon as possible to meet our targets. The then Ministry of Electricity, in a record time for government, I must say, and I think that's thanks to Shakira, created a strategy around the transmission development. It interrogated various models, funding mechanisms, regulatory requirements, logistical imperatives, and tariff structures. The final product has provided a concrete plan for the NTCSA to follow. The approach adopted by the ministry following the study is as follows. Of the 4 models that were interrogated, the independent transmission project model best suits our needs. It balances the need for generation to retain ownership. It balances the need for government to retain ownership of the grid while attracting private players into the space. The build, own, operate, and transfer method, while still somewhat new in South Africa, has allowed for the development of hundreds of thousands of kilometers of lines in Latin America and has been hugely successful as a working model. In terms of financing, the model proposed by us allows for off-balance sheet funding through credit guarantee vehicles, donor funding, private partners, public-private partnerships, as well as jet funding. You see, I'm not good on the money side. Research has shown that ITPs can deliver grid infrastructure at between 35 to 40% cheaper than has been done in the past. The transmission build will also drive job creation and bring a vast number of technical skills to South Africa. We don't need to emphasize the importance of this. So what are the issues? Firstly, the NTCSA needs to get on board and implement the ITP model. We do not have time to reinvent the wheel. Secondly, we need to establish an independent transmission support office to drive this process. The model is ready to implement with funding mechanisms in place, it linkages with the Development Bank of South Africa, and various other organograms are ready to run. We need to get this up and running as soon as possible. We need to secure funding streams, many of which require a structured and implementable project to be in place, as well as regulatory and policy certainty. We urgently need to identify priority transmission corridors. We currently have 66 gigawatts of renewable energy projects ready, while only 10% are able to feed into the grid. Grid congestion is a real threat and underscores the urgency of identifying these priority corridors to break the bottleneck being caused by the delays. Tariff issues need to also become a priority with the unbundling of Eskom to meet the targets that have been set. And finally, we do not have time anymore for talking. We need to start implementation of our national transmission build, and we need to do it with speed, at scale, and with agility. But most importantly, we must never lose sight of the fact that the vast majority of our population are energy poor, and that a major part of what we do must be focused on finding ways to provide access to affordable electricity for all. I'm even more succinct than my colleague, so I'm going to allow the experts to take over, and I really thank you for the opportunity today. Thank you.
So we like the competition of efficiency as it seems that is underway there. Let the next speakers keep on rolling with the succinctness. Deputy Minister, you did make reference to your model of preference, and I think that for the people in the room who are not aware of the other models that was made reference to, the next speaker will be certainly giving us a light on that, having done quite a bit of research in this space, and I know will hopefully simply explain his view on what is best for the country, whether or not it may differ, ma'am, respectfully, to what you are saying. So Mr. Grovestein, he's the Managing Director of Meridian techno-economics, energy advisory and infrastructure advisory firm. And sir, take it away. I look forward to your presentation.
Thank you. Thank you. All right, so let's see if this thing still works after the show. Madam Chair, Honourable Ministers, Commissioners and experts, many experts in this room, ladies and gentlemen, good morning and thank you all for being here. I think this is a really important opportunity for us to not just talk again about the models, but think about how we're going to take it further. I actually first just want to thank both Deputy Ministers for your input. I'm really impressed. It's an excellent input. You've done most of my work for me. And I think we're going to have a really productive debate today and a discussion. I'm going to go quite fast. I've got a lot of slides and we can come back to them later on. This, as we've heard now from Fifi, I'm reporting here briefly on some earlier research that we've done, a report that's on our website. The aim of that work was basically to develop practical insights into appropriate independent power transmission models for South Africa's circumstances. And we wanted to do that by improving the understanding of all the facets of the challenge in South Africa. The infrastructure rollout needs, the specific financing and execution challenges that we have in South Africa, and also thinking about the challenges arising from the fundamental techno-economic characteristics of power transmission networks that have to be resolved by any particular model that you deal with. So let's start with understanding or thinking a little bit about the nature and the scale of the challenge. So to put it in very high level terms, the power grid needs to be expanded to connect more than about 5 gigawatts of power a year for the next 25 years. And as we heard from the Deputy Minister of Finance, the challenge is that our grid is configured to evacuate power from the northeast of the country, where the coal stations are, down to the loads throughout the country. And what's now happened, of course, is that the renewable resources are spread in the west, the southwest, and the south of the country. And that is, in essence, where we run into a challenge, because we just don't have enough grid capacity. So which creates a key bottlenecks. And it's good and it's useful to think about this challenge as two parts. It's having two parts. Firstly, we have a challenge in the center of the grid, where you see that block where the backbone of the grid itself is constrained. And so we need to expand big projects in the backbone, the 76 kV and the 400 kV network. So we can think of that as expanding the capacity from the inside out. But then there's a very important additional factor which is mostly forgotten. And that is that we also need to work from the periphery of the grid inwards. We have to connect all these many new power generation stations and to enable them to evacuate their power from wherever they are onto the transmission grid. Often these networks are actually at distribution level. That's just a technicality. These are 132 kV networks, and then they have to feed into the 400 kV networks. The important point I want to start off with here is that the investment requirement for the evacuation or the grid collector networks is almost of the same order of magnitude as the transmission investment requirement. So the problem is actually twice the size, Deputy Minister of Finance, than you thought it was. Both of those are critical. So the quick modeling that we've done, or sorry, not the quick modeling, but I want to show you quickly the modeling we've done, is that our take on understanding of the Eskom transmission development plan shows that the way it is, or the rate at which it will unlock new power evacuation capacity on the transmission grid is simply not fast enough, right? So it's not just about how much money you spend, it's about how much capacity, how much pipeline you build. And you can see just between the existing picture and what it looks like in 2030, if you just show it in a 10-node model, we are not creating enough new evacuation transmission capacity fast enough. And it's also not clear to us that after 2030, whether the current plans are going to be delivering, if we deliver on time for those plans, as we have planned, enough capacity. So the first point we want to make is we need to revisit the transmission development plan, and some senior key colleagues from Eskom are here, and I'm sure they will have some views on that. The second point that is really important that we want to highlight is going on the actual data. We see that the NTCSA's grid financing and build rates have simply not kept pace with the new generation capacity requirements. You see that on the left in terms of the grid build, and the right, the transformer investment, particularly in the last 5 years or so, the build rates have almost dwindled to almost nothing. This is really significant, not just because we're not getting enough of the new grid capacity we need, but of course the institutional capacity to deliver that capacity is also dwindling. We don't have a big machine running to deliver this capacity. And as one of the deputy ministers mentioned exactly right, we need to scale up our build rate between approximately 8 to 10 times. That's the nature of the challenge. This is an enormous challenge, an enormous opportunity for us. Imagine we can crowd in that level of investment over a 25-year period, what that would do for our economy. So we think that it's extremely unlikely that the NTCSA on its own can support this rate of investment, and even that the sovereign can provide the kind of guarantees in this particular model to support this rate of investment. So we need to think out of the box. And we also don't think the NTCSA can necessarily establish that kind of capacity to do it on its own. We need to work with partnerships. We need to widen the net and have many more parties help us. So that's the first part of the challenge. The task is big, and our current capacity is not up to the task, both financing and execution. Then we have other challenges, and I'm going to go through this very quickly. We all know about the tariff levels, right? This is a very specific point about the transmission tariff levels for transmission, because of course, if you want to finance new infrastructure, you need to know that you are going to generate the revenues that you can amortize the asset and earn reasonable returns on that capital, right? At the moment, even though NERSA says they are awarding real pre-tax WACC at the level of 7%, which would have been really attractive, in reality, when you look at the actual revenue that's awarded, the transmission entity is earning negative returns on its assets. No utility, public or private, no infrastructure firm can finance investments if that's the case. So we are going to have to fix the revenues for transmission. And we can have discussions about the other. Obviously, this distribution is critical, and generation has its own story, as we know. But this is valuable and important. Why? Because the returns on this investment is massive. If you allow those tariffs to rise, transmission is a small portion of total cost of electricity. If you enable those investments, you are, of course, unlocking huge resources and on the generation side that are the least cost power we can generate, and of course, it's clean and all of that. So this is a critical issue. But there's a further problem with the tariff, and that's the structure. Our current transmission tariff structure tells us that there's a constraint when you want to transfer power from the coal-fired power stations down to the periphery of the grid, when in reality, the constraint is the opposite now. Increasingly, we're going to run into the opposite situation. So it's sending a 180-degree opposite signal to what the price signal is that we need to send users of power, investors of power. So if you want to connect your wind farm in the Karoo, it's telling you, yes, please come and connect. You don't have to pay anything for transmission fees. But actually, it's constrained. You can't do it. So we need to fix the structure of the tariff. That's equally important, right? Okay, so now we get to, this was the kind of very quick overview of the problem statement, the challenges we face, all of which are, of course, addressable. We're going to talk now about the critical role for the private sector and helping us address this challenge. So as we've already heard, many studies have recently been done in South Africa, also on this topic, and also learning from international experience. So the key point is, of course, that there are many well-established models for how to do this in different circumstances, and that we don't really need to completely reinvent the wheel. What we do think, however, it is important to understand the particular challenges in our circumstances and choose and adapt the models to work in our case, because you can't simply always just transfer a general model and think it's going to work in every particular situation. So we do need to apply our minds to the problem properly. So, sorry, let me just jump back here quickly. So you would have heard of these models. These are, the whole network, long-term concessions, build, own, operate, independent transmission projects. That's obviously one of the key models that we are considering currently. There's the whole idea of merchant lines, when really investors take the risk on the infrastructure because they're feeding into a power market and they essentially want to arbitrage opportunities between two different power markets, for instance. And then here's an important one for us as well, which we generally neglect, is the idea of dedicated lines for customers or IPPs. You can think about this as an example where let's think about it in terms of roads. If you have a mine, a mine somewhere in the middle of the bush, miles away from the normal national road system, and that mine needs a big proper road for all its trucks to run on, it can commission a privately built road just to get that infrastructure working. Now, this model is potentially also important for South Africa, for the evacuation of power from new IPPs onto the main transmission grid, right? So in this case, we're talking about the idea that the IPP-backed grid collector model is now increasingly becoming more important. The basic business model is that the IPPs are actually the off-takers of the capacity for that evacuation grid. They procure it collectively. They are the counterparties in the transaction, and they essentially pay the fees, which of course they then ultimately recover from their customers. You still need an independent grid company. You don't want to bundle generation and transmission together, or even the distribution part. It needs to be an independent arm's-length entity. But this is a really important model, and we'll come back to it. So our findings are that the circumstances in South Africa suggest that two complementary IPT procurement models are required to meet our grid expansion needs. By now, this shouldn't be any surprise to you, given what I've been saying up until now. So, of course, we will benefit from adopting the conventional state-backed IPT model for the large interzone power transfer or backbone projects. And I think that's kind of what most people have in their mind when we talk about IPT models. This is clearly critical. This is the kind of infrastructure where it's in the middle of the network. It's very hard to allocate the benefits to a particular party. It's like when you build a national road. Everybody benefits from it. There are a lot of positive externalities. It's the typical situation where the state would play an important role, right? And so we think of this as expanding the grid from the inside out. And this is the environment where the NTCSA would have to be the counterparty to the capacity that's being procured and operated by an IPT. But we also think we need a further complementary model, and that is an IPP-backed IPT model for the evacuation of power from the generation sites and connecting into the main grid, and sometimes potentially quite deep into the grid, right? So that is the 132 kV network, the 400 kV network, and maybe in some cases even into the 765 kV networks for huge mega projects that are now also being considered by some of these developers. So these two models are complementary, working from the inside out and from the outside in. We think we do need the state-backed model. It's unavoidable, but we've already heard some of the challenges with it. Its reach will be limited, partly just because of our procurement capacity and given the rate we have to do things, but also because of the balance sheet constraints we have, both at the NTCSA and at the sovereign. So that is going to be an important part of the story, but it can't fulfill all of this grid needs. We think the IPP-backed IPT model, very critical. And the interesting thing is we already have that model in a different form. It's called the self-build model. Eskom implemented a set of rules allowing IPPs to build their own grids to connect to the transmission network. That model, the way it works now, isn't necessarily going to work into the future. It needs to be tweaked, and we'll talk about it now. But there's a precedent. We're already, in effect, doing it. We need to shine the light on it and give it a name, because it's going to play a big role in our future. Right. So really, this is just we don't have time today to get into a lot of this issue, but we are dealing with natural monopoly infrastructure. We're dealing with positive externalities. There are reasons why in the past societies have chosen to have the state or public utilities roll out this infrastructure to avoid the abuse of monopoly, excessive pricing, all of that. Our models haven't always worked that well, but when we design these new models, the point being made here and in more detail in our paper is that we need to understand those challenges very well and design our procurement processes and the models we set up when we use private IPTs to ensure that we still achieve the public good, the public interest, right? So for instance, we should, a transmission or grid provider should always be independent from the generation market participants. Grid capacity should always be competitively procured. So we have good, efficient price discovery, right? And the risks should be allocated efficiently to create appropriate incentives and not inefficiently to create perverse behavior. Pricing should be based on ex ante competitive procurement, ideally. It's much better doing that than ex post tariff regulation that we've seen with a lot of experience in South Africa that does not work very well. It creates a lot of risk, increases the cost and the financing cost of projects. And of course, we need clear defined rules and fair rules for grid access and interconnection rights. And that's where that's some of the details we have to work through. Right, so here we'll talk briefly about the state-backed model. There's a lot of work already going on, as we heard from the ministers. So a lot of experts in the room here are deep up to their elbows working on these models. So I'm not going to try and take you through a lot of this right now. But basically, the structuring of this deal, we think is essentially done on having a clear specification of what it is that you want to procure, where NTCSA's grid planning is going to be very important to help us understand that. Then running procurement auctions, very much like we ran the IPP REAP program, and then awarding 20 or 30-year concessions for that particular piece of infrastructure, and placing most of the risk on the SPV, on the private company, for the development, financing, construction, and maintenance of that infrastructure over that period, right? In this case, the NTCSA is the counterparty to the transaction, and the off-taker of the capacity. They use the capacity. Competitively bid performance-based capacity payments will generate low-risk fixed return over the contract term for the investors, but on a fair basis with risk appropriately awarded or allocated. The system operator continues to operate all interconnected assets on the national grid, right? So even that IPT is part of the national grid, and from a system operator's point of view, just another bit of network that is being operated. There's no difference. And then, in our view, after the concession period, when the asset has been amortized, in other words, investors had their returns and their capital back, the state now has the option to transfer ownership to the national transmission utility. That'll be a long time from now. It'll be 20 years from now. The state will have a call option. If at that point we have another way of running our business, we can do that. If the state wants to integrate it, transfer ownership, it can do that. So that's what we think is important. We've heard a little bit about some of this in the previous talks. I'm not going to go through this in a lot of detail, but it's clear that this gets very complicated. A lot of risks need to be clearly identified and efficiently allocated so that they can be mitigated in the way it's procured and the way the contracts are written, right? There's things like demand risk, credit risk, or off-taker counterparty payment risk, a key thing for us in this discussion today. There's construction risk. We've seen a lot of that happen in South Africa from IPPs, Medupi, Kusile. We see our construction risk can go really wrong. Price escalation risk, inflation risk, foreign exchange exposure, option maintenance, the risk around the availability of the plant going forward. There's, of course, getting the initial land use or rights of way and also retaining that. Risk around changes of law, regulations, tariff structure, tax structure, all of those things, over a 20-year period, lots of things can happen. You have to provide for all of that in your contracting structure to the extent that investors are confident to still finance the project. And of course, the usual force majeure or major relief. And there are many different ways to address all of these risks. We need to do them in the way that we put most of the risk on the entities that are best positioned to manage those risks. We'll hear more about National Treasury guarantees, I'm sure, today. In our view, it has an important role to play to support the state-backed IPT model, not the IPT model. There's quite a narrow path that you'll have to follow to get there. In short, really, well, the big problem we hear from National Treasury colleagues is that they're concerned around problems like moral hazard, right? So when SOEs come to them and they really want, they don't want to take the hard decisions to run their businesses properly. So they get guarantees and they know they can actually call on them at some point because they're too big to fail. Those kind of moral hazard problems you definitely want to avoid. And then you also have problems like adverse selection. So the entities that don't really need the guarantees don't come to the Treasury for guarantees. It's the ones that really do need the guarantees that come. And of course, what you really want is you want a situation where the projects are developed in such a way, and so the underlying structuring of the project and the underlying business case and economics of the project is so well designed that by the time it comes to Treasury, it doesn't really need a guarantee. It's really just a last rubber stamp and add on to the project, which is an important signal then to other players like MIGA, the IFC, etc., that Treasury has given its nod. And if Treasury approaches the problem in this way, it creates huge confidence in the infrastructure. So that is, it seems to me that that is currently the process being adopted. And if we do it like that, the balance sheet impact is significantly contained and can be shared with these other entities. Of course, we'll have to update our regulations. Like for the new gen regs for IPPs, we are going to have to end up with new regulations on electricity regulations on new transmission capacity. We probably need some of that to be enabled in the new Act. So on the legal side, some changes that will have to be done. There's discussion around whether we can do the first pilots under the existing Act. I'm of the view we can, but ultimately we need the new Act to make this work well. So we have to think about what an IPT office looks like. I'm running out of time, so I'm not really going to go through this in a lot of detail. But if you go through this, you'll see that if you set up an IPT office, it needs to be a world-class institution that has access to world-class skills, well-resourced, independent from short-term political meddling. And that is the only way you create the credibility and the confidence for investors to engage in the process. I want to talk briefly about the IPP-backed IPT model. This is now working from the outside in to connect the generators. So the first point is that the current Eskom self-build model was one that developed under the REAP program. And essentially what it means is that IPPs build many hundreds of millions of rands worth of distribution infrastructure and then hand it over to Eskom for no consideration and recover that grid cost in the energy tariff they bid into the REAP. Okay, it was a hack at the time because Eskom didn't have the capacity to deliver the grid. But that's not going to be sustainable going forward, particularly not in the market where if you don't sell into the REAP, if you can't socialize the cost over the whole grid, we need another solution, right? So firstly, we want to separate grid costs from energy costs. That should be clearly distinct. And then importantly, we need to understand that the costs are going to be increasing to connect IPPs to the grid because we've plucked all the low-hanging fruit. Now you need to be building 80, 90, 100 kilometer networks just to get to the transmission network. And then you still have to build substations and expand the transmission grid. So we need a new model that can be commercially viable, that can be driven by the IPPs that are co-located in a particular area, but in a way that, in a model that gives them the confidence that they can get connected to the grid, right? So we think we must supersize the self-build model, tweak it, and get it to be take the shape of an IPP-backed IPT model. Essentially, we want a model that enables the IPPs to collectively procure development, financing, delivery of deep grid connections. That's what we want, right? It is a boot model, but in this case, the counterparty to the IPT is not a state entity, but several closely located IPPs who ran this initial procurement, and perhaps others that will join them over time, right? And I've already given the example of a mine that's somewhere in the middle of nowhere and that needs a road built to the national road system. So this is not, don't confuse this distribution infrastructure with distributing power to end users. It's not the same situation. This is a new segment that didn't exist before. This is about evacuating large-scale power from generators onto the main grid. Of course, this has huge benefits because what we're doing now is we're diversifying the risk of this grid investment over the balance sheets of all the IPPs and their customers. So completely avoiding non-credit-worthy entities in between, and therefore avoiding having to provide sovereign guarantees. It will unlock additional execution and financing capacity to accelerate this grid build-out. They can also access concessional funding, climate finance, etc. What's important is this is also at the end of the boots period, at the end of the 20 or 30-year period. You can still have the option, because at that point the asset has been amortized, to transfer the asset to the national utility in that area, whether it's Eskom distribution or whoever the entity is at the time. So you can still transfer to the state. This model doesn't stop you from doing that. But what it does do is it leverages private sector balance sheets to deliver the same infrastructure that we need in the public interest. We're going to have to think about the revenue model a little bit, because you don't want customers on the other end paying Eskom grid charges for grid that they have to finance themselves. So we will have to figure out a credit mechanism for those customers buying from those IPPs, right? That can be done. So we're out of time, so I'm going to just quickly mention the last few points. We're going to have to establish this model. We have to amend the Eskom self-build rules to extend it beyond 132 kV. Currently, I think it only speaks to the 132 kV to allow them to build into the 400 kV infrastructure. NERSA currently has an exemption, a licensing exemption for IPP distribution grids. But this must be changed so that it refers to IPP grid connector infrastructure, so that it's irrelevant what the voltage of the infrastructure is. It must be about its economic function. Is the function of that grid to evacuate power from IPPs deep into the transmission grid? If that's what the function is, then they should be exempted in terms of Schedule 2. So it's a very small amendment that actually needs to be made there. Of course, for all these models, we need to fix the tariffs. And we need a legal instrument that allows IPP customers to recover some of the grid fees they're paying via the IPP and not double pay for grid. So that'll be some of it. Madam Chair, this is my last slide. So in conclusion, we think it's important to revisit the transmission development plan and increase its ambition and increase the hockey stick effect, where really the real capacity is only really added on 10 years from now. We need to ramp up capacity now, sooner. Given our challenges in South Africa, our needs, and the need to urgently expand grid, we think we need 2 complementary IPT models, as I've just explained. In addition, of course, to the NTCSA's own EPC build program. So we actually need 3 programs. We think that these 2 IPT programs are actually quite different in nature, and they need to be driven by 2 different initiatives in the state, right? The one is a procurement-focused program, the state-backed IPTs. There's already a lot of effort going on in that program. But we think there's a separate work stream necessary to enable the IPP-backed collector grid IPTs, and that is probably more focusing on policy and regulatory reforms to enable that model to work, right? 2 separate different things. I've spoken about that dysfunctional transmission tariff structure and the fact that the tariff levels needs to be increased for all of the models for delivery. We need to extend the licensing exemption for the IPP-backed IPT models. We need to fix or finalize a credit guarantee model for the conventional state-backed IPT model. And then perhaps just the last few comments it's really important, and I know there are, people, different players view these ideas differently, and particularly the NTCSA would, of course, have particular views on this. But for all of us, it's really important that we don't confuse the interests of our current monopoly incumbent with the public interest. Those are two different things. We need to approach this discussion and these debates from a public interest point of view. What does the country need? And then we figure out the details about how we do that. And our view is that we need to drive and implement these processes around these two models from outside of the current incumbent, right? It's just a fact of life that you can't ask an existing incumbent to, in a sense, work on its own, on building its own competition. It's not going to happen, right? So we need to be realistic about that. That's not a comment on the individuals involved. If I was sitting on that board, I would also see the world differently, right? The reality is, all around the world, experience shows change like this should be driven by government from outside of the entities to set up the kind of industrial organization we need to serve our country. And the last point is, and it's rather obvious, we have already demonstrated in South Africa large-scale investor interest in the South African power market. You see it in just a massive interest in the IPP sector, and everywhere around us, the DFIs everywhere. There is huge appetite to invest in our entire power market, including in grid. If we get both these models right, we will really unlock an unprecedented, sustained grid and power generation investment program in South Africa with all its associated benefits. Thank you very much.
Thank you. Thank you. I saw quite a number of people out with their phones just taking screen grabs of your presentation. So clearly a lot was said, but it went down quite well. Will your presentation be shared?
Yeah, a longer version has already been shared,
It has
and I'm
been
very
shared.
happy
Where
to
is
share
it
the short
available?
version as well.
Okay, okay, perfect. Questions at this stage? Any? So, okay, 2, okay, 3, okay, 3, okay. Okay, so 4, okay, all right. So I'm gonna ask if we just take 4 questions this round. We break for a tea real quick. We come back and we have the panel discussion, and there'll also be a session whereby we can take a lot more questions. Is that fine with everyone if we do it that way? Okay, so let's take the first round of 4 questions. There's a gentleman here in the front who put his hand up first. Thank you, sir.
My name is Enos. Provia, I see you didn't talk about privatization. Just wanted to understand why you wouldn't say that. I'm thinking of a time when the Ministry of Post, Telecommunications and Broadcasting hived off a section of a department and created what today is Telkom. And I was privileged to do the privatization transaction advisory for the government to sell 30%, and which created the regulatory environment for ICT and telecoms in particular, and the Universal Services Agency to deal with the question of unequal access and affordability. So I'm just wondering whether that was considered. That's question number 1. The second one, I'm missing data on the macroeconomic capacity to absorb the 400 billion that's required for transmission, because the assumption is obviously that the economy can repay that. And I was just wondering if there is a verification of that sort of critical data assumption. Thanks.
Do you want to take that now, or you want to hear everything? Yeah, go ahead.
Thanks, Enos. The privatization this discussion, I think I agree with you. I think it's really important to actually put it on the table and have a proper conversation about privatization. I mean, we see people talk about the kind of models we're talking about here as privatization. In my mind, that's not privatization. I mean, at the moment, nothing exists, but you're going to get new things built, right? Generally, I thought of privatization as taking a public entity and privatizing it in the example that you've used. So I'm very much in favor of the kind of models we discussed here for the reasons I've explained. I think, perhaps let me just say, the reason is, the key reason is that you're starting ex ante with a competitive process for new infrastructure, and you're allocating risks efficiently in a competitive process. So you get efficient pricing, you get price discovery that's efficient, and you place risks relatively as efficiently as you can on all the different players. So that's why this can work well. It's a very different ball game when you take an existing natural monopoly business and you privatize that. So in my view, and those of us with long memories, the telecom privatization was a disaster. Sorry, Enos, but it did not serve us well because it's just too easy for politicians and other stakeholders to essentially use it to extract monopoly rent. It might be for political purposes. It might be for whatever, just pure profit, whatever. It's a very different situation taking an existing national monopoly and privatizing it and then trying to keep it efficient. The only way you've got is the way we currently regulate with NERSA. And I think having worked as a regulatory economist in energy for 30 years, I have to say that ex post economic regulation is a far second best option to having ex ante competitive processes for price formation. Economic regulation is a very hard thing to do, and we generally do not get it right in this country. And it creates a lot of investor risk. The pricing is incorrect, either too low, too high, information asymmetries. It's a mess. So for now, and also given the ideological confusion around many of these issues, we've taken the view it's probably, for a number of reasons, very pragmatic to have set up an independent transmission company as we're doing, look at the governance, make sure the board is appropriate, make sure the performance, get transparency, reveal as much information about its performance, all those good governance things, and just live with that for the next 5 or 10 years, and then focus on building these IPT models in the meantime. So that's where we've arrived. But it's definitely a debate, and I think it's good to have those discussions. Your second question, the answer is very short. I certainly haven't done or seen the kind of macroeconomic analysis that you refer to, but I think at a kind of a high level, one can say that the economy is currently paying for power. And if you look at with all the load shedding we've had and how much we've paid for diesel and how much we paid for solar roof systems and how much we pay for everything related to meeting our energy needs, if you take that whole pool of resources, the cost of unserved power, that if you take all of that and you say we can have a situation where we can meet the economy's clean total energy needs with clean energy at a lower cost than we're doing it today, I think there's an enormous potential in the economy to pay for this. So yes, we haven't done the modeling, but some basic common sense kind of first principle thinking gives you a very encouraging sign.
Okay. I know that there were other hands there as well. Could I just ask that we just stick to one question, just this round, and then after the tea break, we'll be able to ask a whole lot more.
Thank you. My name's Robbie Lowe. 3 very quick pieces of background to the single question. First of all, when the Deputy Minister of Economics, of Finance opened, he started with the CBAM. Secondly, the REAP program is generally globally considered to be one of the most successful procurement programs of renewable energy. It's globally acknowledged. However, there was one very significant shortcoming, and that is they never articulated or defined or contracted for the economic value of the environmental attribute of renewable energy. It just went without saying. And the IPP office is actually at the moment doing some difficult work in trying to untangle this 4-dimensional spaghetti about the economic value, ownership, transfer of ownership of this environmental attribute of renewable energy. And the third point is all finance models must fundamentally rest on a revenue model. And you haven't touched on it really, but I suspect that your revenue model probably does not include this increasingly important economic value of the environmental attribute of the renewable energy. So the question is simply, are you looking at it? Because I think that the current regulatory framework was probably not really conducive to bringing that in as bankable revenue. And that is in the context of, for instance, the work that, I don't know, before the split of the departments, the DMRE and DFFE has been doing on, for instance, the Article 6.2 framework for South Africa, and the role that could play in bringing climate finance into the country.
No, good.
Would you like to?
Thank you, Robbie. I'll be very brief. So this discussion is about how we expand the grid. It's not about the energy that's going to be transported over the grid. So the green attributes attached to the renewable energy. So that's essentially a separate conversation, and important one, very much so, but it's a separate issue. It's not related to the green attributes don't attach or adhere to the grid projects. I mean, of course, we want to expand the grid to enable more renewables to be connected to the power system. But ultimately, when the commercial contracting is going to take place, whether it's through the REAP or private procurements, it'll be about the energy and how the green attributes attach or part of the energy units that you're procuring. So that's a separate issue, the actual energy market. There is definitely an opportunity for concessional funding to support the rollout of the grid, right, at both the distribution and the transmission levels to enable clean energy to get onto the grid. And there's some of those funders are in the room here. So absolutely. But you are not going to get a direct green revenue stream from grid infrastructure. That you get from the green energy.
Okay. It sounds like a lot of conversation that can take place further during the tea, which we should take now. Sorry, going to go back on my word just a little bit. The two questions that I didn't take, we can take after tea, as well as others that do arise. Before we do go to tea, however, I just would like to acknowledge the following two people who have joined us subsequently since the program started, beginning with Ms. Priscilla Mabelani, who's the chair of the board of the National Transmission Company of South Africa, as well as the interim CEO, Mr. Sekgomotso Skeepers, who we will be hearing a little bit from when we return for tea. Can I just make a suggestion that maybe we grab what we need? Obviously, anyone who does need to use the lavatory, you do your thing, but feel free to bring your refreshments back in the room just so we can make sure that we start back at, oh, right. Okay, so we're not going for tea just yet. Apologies, but we're just going to have a brief, a few brief words that will be shared by the interim chair of the National Transmission Company of the country, Mr. Skipper. So it's over to you. By the way, thank you so much. And I know that you're going to be speaking a little bit more, so please don't take your mic piece and all of that off, because there's a few questions that are still unanswered at this stage, but I'll relieve you of your duties for now and ask Mr. Skippers to assume his. Thank you, sir.
Good morning, Honorable Minister. Deputy Minister, apologies. Somebody might say I am doing something wrong. Ladies and gentlemen, thank you very much. My name is Sekgomotso Skeepers. I'm the interim CEO of NTCSA. I thought I should just come in and listen. But then when the lady said you must speak, it's difficult to say no to a lady in this forum. Unfortunately, I have a commitment in Pretoria, so I was going to leave a bit early, but I'm very happy that I was here from the beginning. Deputy Minister, we hear you loud and clear. And I think we hear all the key stakeholders very loud and clear around the imperative to make sure that we move with speed in terms of the rollout of the infrastructure. We will be providing further updates as we go along, and we do accept that we need a lot of help. I'm very appreciative, and we've engaged with Javier on this presentation as well previously. And so we are talking to different stakeholders around options and solutions and innovation. So we are very open to ideas that can help us move the needle and move it faster. We are very clear that we have to be part of the solution. This issue is big. It's exactly, I think, it's a national interest issue, and we have to make sure that we make our contribution. The question of the tariff, Javier, is one of the issues that we believe we need to grapple with now, because in a way, it's almost a precondition for many of the options that we have, and it's a very difficult one. But if we can't deal with it, unfortunately, Deputy Minister, we'll still be talking about this a year or 2 or 3 from now. So we have to address the issues around how we secure these revenue streams that fundamentally underpin the necessary investments. In various configurations, this becomes one of the essentials, and we are engaged in various engagements with different stakeholders to look at options and solutions. And exactly as I said, we are resolute to be part of the solution and to make a contribution to addressing the country's energy security needs, as well as to support the transition. Thank you very much.
So I probably should have said before you go too far, can I invite you back on stage? Can I also invite Mr. Crispian as well as Ms. Shamini just to take a picture, as well as, of course, the Honorable Deputy Minister. Ma'am, can you join? No numbers will be required from you, just your presence in this. So the photographer's right there. Could I ask that you hang 10 for one more second? I don't know if the Deputy Finance Minister is coming through once again. I think protocol would have that he show that he was here. Wonderful. Wonderful. Thank you so much. Thank you. Thank you. Thank you so much, sir. Thanks. So let's take that break now. Maybe meet back in 10:15. I'll also just let you know when we're starting again. But thanks. See you soon. Just spare with us 1 minute or so. I do know that the ushers are just trying to get them back inside for us to begin. I think we can begin. Hello. I've got time to manage, which might be a difficult thing to do, just given the segment that we're going into right now, an interactive one on a very important topic, ultimately, that brings us here today on the financing models and discussing the various revenue streams and actually getting your take on the presentations that have been shared already this morning. And those of you, of course, who are not going to be speaking on the panel, getting your take on what the panel has to say and hearing your insights thereof. I do know, as I said at the beginning, I am in a room full of experts. I know that the banks are here, major banks in this country, the major multilateral institutions in the world are here, development banks are here. And so please don't be shy in providing some of your inputs in advancing what we are trying to achieve right now. But I would like to welcome first on stage individuals who will be leading the conversation and leading the segment for us, beginning with a gentleman who has welcomed himself. Clearly no stranger to the individuals in this room, but Mr. Enos Banda, founder and CEO of the Green Transmission Company, as you would know, focused on connecting renewable energy projects to the grid. Sir, could I also please invite to the stage Mr. Kevin Anderson, who's the Head of Strategic Initiatives over at the Climate Fund Managers. Mr. Neil Cole, Financing Manager for the Just Energy Transition Investment Plan, part of the team there doing really important work. I don't know why you're saying no. Why are you saying no? But she was referenced a little earlier for the contribution that she has made in keeping things quite lit right now from an economic perspective. Ms. Shakira Karolia, the lead economist over at the Department of Electricity and Energy. Please welcome. Woohoo. A declared bias there, but we appreciate the transparency for that. We also have Mr. Mark Bear, the strategic advisor, member also of the regulator NERSA. Welcome, sir. And last but not least, There you go. Mr. Ravesh Rajal, the Chief Director for Sectoral Oversight over at the National Treasury. Welcome, sir. What was that? Oh, woohoo. Louder. So you come from Abuja. I thought that they would have, taught you how to. If there's any culture that knows how to celebrate themselves, I've found in my experience it has been Nigerians. But thanks so much for taking that on the cheek. Wow, okay, so I need to be superwoman and remain elevated for the duration of this conversation. All right, let's go. I'll make sure that I'll invoice the PPC for the foot massage. That will be required after this. Shakira, maybe beginning with you, not because you're a woman, but it is what it is. Maybe can you just kick us off with providing some insight, an overview of the Ministry of Energy and Electricity's recent work nowadays, particularly when it does come to financing transmission infrastructure, as well as some of the things that you also have up the pipeline in this area.
Thanks so much, Fifi, and good morning, everyone. So, we were very happy to be back at the JSE firstly, following, the discussion that we had last year, September, under the leadership of Dr. Leila Fourie, Putuma Ntleko, and also Minister Ramokgopa last year. So it's great to be back here and also discussing the same subject matter. And I'm glad that we are now advancing and also moving forward with a much greater focus on implementation. So the then Ministry of Electricity during the course of last year was tasked by the President and Cabinet to explore alternative financing and funding mechanisms for transmission infrastructure development. And what we then did, and that's why the seminar last year was so important to us, because too often as government, we're very inward looking, go and do some, research somewhere in a corner. And we really wanted to first start with bringing the best brains together, people that are practitioners in the space. So from, government, private sector funders, academia, local organizations, etc. And we really had some of the best minds in the room over a full day session. And we used a lot of that output to actually, inform our research and our recommendations going forward. So we did extensive, research, I would say, from around August, September last year, and that culminated in the tabling of a report to Cabinet on the 8th of December last year. And that particular, we explored 4 different ways in which to fund transmission infrastructure. And in addition to that, did extensive work with the Johannesburg Stock Exchange. So for instance, we also included looking at things like initial public offerings in the debt and equity space. We explored that extensively with the exchange. And the other models we looked at were, of course, ITPs or IPTs, whichever convention you prefer. And we looked at grid concessions as well as merchant lines, single purpose lines, etc. So we then recommended to Cabinet the adoption of the ITP model for the country. And there were 3 key outcomes from that particular Cabinet report. The first was around priority transmission corridors and ensuring that we're able to definitively prioritize that. Within the Eskom's transmission development plan, there is a mechanism for that prioritization, but we really need the split between what in the short term will be can be publicly financed and what can be privately financed, because that's going to implement the way in which we roll out ITPs, not only in the short term, but also in the medium term. The second element was around the build, own, operate, transfer model, which National Treasury has done extensive work with the IFC on. And the third was the establishment, as the Deputy Minister had reflected earlier, around the establishment of the Independent Transmission Projects Office. So we are following that Cabinet report. We conducted extensive market sounding, in both locally, but also utilizing platforms like the World Economic Forum in Davos, as well as engagements with international investors and also locally, as I mentioned. At that time, the NTCSA board was of course not appointed. In January, the NTCSA board was appointed. So the ministry then engaged, immediately in February and March, the NTCSA board to share, some of the proposals that we have made. Since then, and this is where, I'm going to conclude, it's the last point I'll make on this. Since then, we've done extensive legal work around how can this be enabled within our current legal framework. So we looked at 2 scenarios, and this is really working closely with National Treasury and, the work commissioned by the IFC, but also a ministry team. So we looked at the current, if the ERA in its current form, what needs to happen? That was the one scenario. The second scenario was considering the ERA amendments. Of course, the ERA amendment bill makes it much easier. It creates a much clearer framework to enable private transmission. So we've worked with those 2 scenarios. We've now, also progressing to the stage of looking at ministerial determinations for to enable private transmission, and secondly, looking at the development of new transmission regulations to complement that. So this was in the same way. Many people in the room will be familiar with the REAP program, and there's been a lot of talk about that. So with the REAP program, there were new generation regulations, and that's important because it really creates the rules of the game, and it ensures, a predictable, transparent, and certain market conditions for investors. So that's where we currently are. I could speak a lot more on this, but I'll stop there.
No,
Thank
we can
you.
see. I can see. But well, we actually do want to hear a lot more from you, and we'll be coming back just to understand, okay, now that you are where you are, what are some of the opportunities perhaps, or even some of the challenges in implementing a lot of the plans that you have on the table. But I'll come back to you, Neil. I want to come to you, sir. Just making reference of the that $8.5 billion US dollars in international climate finance that was initially committed to us. I know before the program had started, you had informed me that it has now increased. But in terms of that commitment, can it and does it make your job a little bit easier, or the country's job a little bit easier in soliciting other forms of finance, in terms of it standing as some form of guarantee or some form of leverage to invite other capital to come to this country?
Thank you. Thank you, Fifi. So Shakira and I agree on most things. In terms of the approach, where we do disagree sometimes is on what represents the short, medium, and long term. And I think a lot of what I think has been presented, starting with Javier, is I think about the medium and the long term. When I was here last year at the same event that Shakira referred to, I spoke about the 8.5 that is now grown 11.6, and about 70% of the 11.6 billion US dollars are concessional loans, and they're concessional loans defined as such because they are substantively more favorable than if the sovereign was to go to the debt markets. I mean, I can just mention 2 of them, and I'm going to be using the debt chapter in the budget review so that I don't reveal any secrets before the MTBPS. An AFD, or the French Development Bank, could be anywhere in the region of about 4.3% with a 5-year grace period, with a maturity over 20 years. KfW is another contributor of concessional loans to the 11.6, and the terms would be very, very similar. African Development Bank could be slightly higher than that. The NDB would be slightly higher than that, but this would all be subject to the base rate and the negotiations and other costs associated with the concessional loans. And I think the concessional loans, what it presents us with is to move with urgency, is to get out of the blocks while this work is still underway, to set up, whether it's the IPT or the IPP, which, I mean, in our estimates, could be anywhere between 18 months to 2 years before we are able to go to market to procure private transmission. And maybe Mark will also comment on the time frame here. But the concessional loans that are in that initial 8.5 billion pledge, that's now 11.6, does enable us to get out of the blocks quicker, provided that we also take the necessary steps in terms of Eskom applying for those exemptions because of the borrowing moratorium. And this needs to, I think somebody needs to convince the NTCSA that they need to prepare those plans, that the TDP doesn't get us to where we need to be, that these concessional loans provide a critical source of financing to have that enhanced TDP that gets us to the levels that Rovia spoke of, and also that I think both ministers referred to. And then maybe just to conclude on a project that we're working on at the moment. It's not a transmission project, but it provides an indication of how these concessional loans can be deployed, and also how these concessional loans achieve the leveraging in order to bring in private investments. And that is the Accelerated Coal Transition Investment Plan, where you have a financing structure comprising of highly concessional loans from climate investment funds. It contains MDB, concessional finance, and then leverages private investment at a leverage ratio of about 1 to 5.
Sure.
And I think it's an interesting model to look at, and one that we may want to take a closer look at, depending on the kind of financing structure that we may need to take a closer look at. Because I think even with these IPT and IPP models, there's still the issue around the sovereign guarantees. And if we just look at the REAP contingent liabilities, I mean, it represents more than half of our contingent liabilities. Will the Treasury be prepared to take a similar approach in terms of increasing contingent liabilities to provide those sovereign guarantees? I think is the missing bit. There's interesting work being undertaken by the World Bank Group at the moment to design a credit guarantee vehicle that I think needs to be brought into the mix.
Okay.
In order to ensure that the models that we put in place don't contribute towards a higher level of contingent liabilities.
Okay.
Thanks.
I think, I mean, to the point of the National Transmission Company of South Africa, I think I was humbled. He seemed very open to receiving ideas. I hope, okay, I didn't see that, but he seemed very open to receiving ideas. And so perhaps let's continue the conversation and add those ideas to him. But Rish, maybe you want to pick up from what Neil was talking about, particularly the idea of the guarantees, the thinking, the work that you're doing with the World Bank, and what you are able to share at this time with us. So.
Thanks, Fifi, and good afternoon, good morning to the Deputy Ministers and all esteemed colleagues. Yes, so I mean, we have been in fact, we've just started recently. There was a World Bank mission that we had last week, the initial World Bank mission, where we started looking at the credit guarantee vehicle. So we're looking at options to de-risk, as the as the Deputy Minister of Finance has mentioned. So that work is actually in the first phase, where we have already started engaging with our stakeholders like the DFIs, the lenders. We've also engaged with the various departments and so forth. I think now that's done, they will be back again in around about October for a phase 2 to advance it further. So obviously the main intention is, as Neil has mentioned, is that if one looks at our guarantee portfolio and we look at the IPPs in particularly, we have about 270 odd billion. of guarantees to IPPs. Of that, we've already are exposed to 200 billion. So the framework is quite constrained in terms of advancing any further guarantees. So we think and we believe that the credit guarantee vehicle will be a good tool mechanism to basically take off the risk from the fiscus, but also to de-risk the project itself, because obviously before any funders would want to fund, they would also want to see that that the risk has been taken care of. So obviously that's quite important from our perspective. Obviously the two biggest risks, as Dr. Steyn has mentioned, is around termination risk and payment risks. So obviously we are looking at different types of funding mechanisms in the credit guarantee vehicle. But what's important to say is that government will have a stake in it as well. So obviously we haven't finalized that shareholding in the credit guarantee vehicle, but hopefully in the next 6 months to a year, we should have it finalized. So that'll be quite important for investors to have that certainty before they actually invest. So there's a lot of work going on there.
Okay, so we have heard also throughout the day, throughout the morning, about the PPPs and how this is an important framework to actually advance in this area. And so, Enos, I was wanting to draw from your thoughts here in terms of what this government is trying to do differently regarding PPPs. I mean, we have heard, cut red tape here, make it easier, deal with the bureaucracy, all of that. But in terms of what we have heard this morning and the framework for PPPs in your view and from your experience that could be effective to solve for what we're trying to solve for right now, what would you say?
Before I say anything, just to congratulate the PCC for switching from a presidential decree to a proper statutory body, and which means that, climate change is a fixture in the future of South Africa and how we deal with it. So we are sort of on the cold phase of the need for grid, in that we talk to developers and institutions with significant demand for new energy capacity, particularly renewable energy, because of the various considerations. The investment community is looking for companies to clean up their energy inputs, scope 1 all the way to scope 3. CBAM is a much clearer expression of the market impacts of not doing that. So we talk to a lot of developers, and what is becoming very clear is that we are running out of time for deliberation. And so our approach as a business has been to look at what can be done under current constraints. And we look at the grid investment environment in two ways: the high voltage aspect of the investment, and what is called the distribution network, which is 132 kV, where most developers actually normally interface with the grid, even on a self-build model under the REAP. So we believe that the REAP self-build option created a very sound foundation for giving agency to the private sector to connect on the basis of a clear expression of the need for a connection. The challenge with transmission and grid infrastructure is that it's a sort of a self-selection process. It's not something that is an equal access, an equal right infrastructure. You have to raise your hand and say, I need a connection. So those who need the connection are the developers. And at the distribution level, which is 132 kV and below, the REAP self-build option provided a useful way of self-signaling and actually taking responsibility by developers. But like any other developer, they were looking at it for dedicated lines to serve their projects. They were not doing that for somebody else. And what it has created is a very expensive environment for connecting to the transmission infrastructure substation, the MTSs. So we are looking at a project today, which is to connect a series of developers up to about 2,700 megawatt of capacity in an area to a substation. And if each one of them did it on a dedicated line basis for themselves, it would cost about 6 billion rand. With us aggregating and essentially intermediating among the developers as a neutral party, we are able to reduce that cost by 40%. So what it actually shows is that there is a macroeconomic cost to, self-build dedicated, very exclusive lines of connection to the grid. So we are looking very, very seriously, and to the Deputy Minister of Electricity and Energy's point, we treat this as a matter of urgency, and we've found, to our pleasant surprise, that the NTCSA and Eskom distribution appreciate the value of this. Because the other aspect of it, other than reducing costs for developers, is instead of 7 points of interface in dispatching electricity, you consolidate that into a single dispatch. So we become an agent for 7 or any number of projects that are connected to the grid to dispatch them with a transmission system operator, which creates ease. The other point is that you are able to optimize and make the connection of the various developers and the generation projects future fit. And what do I mean by that? Just by including certain loads into the collector grid, like a battery, you are able to actually manage the profile and the dispatchability so that you use less MTS capacity than what we normally do. Let me give a very quick example and I'll move on very quickly. So if you have a 100 megawatt solar PV project that needs to connect to the grid, they need 100 megawatt of substation capacity to do so. But on average, they'll use about 30% of that per year. So which means you have overcapacity for the portion that they're not using. So by aggregating developers and combining both wind, solar, and even storage capability, which we can socialize in the sense that it becomes more affordable to do these things because you have more players rather than dedicated interests, we are able to optimize in how they connect, how they dispatch power, and the actual overall cost of doing that, the profile of how that power then gets dispatched, and therefore the lowering of the investment that otherwise would need to be made. It's almost like the difference between everybody driving in their Rolls Royce to the nearest point of connection versus a very nice, luxurious bus. Still a very expensive item, but it is much lower in cost and does the job because people know exactly where they're going.
Sure.
So we will be launching, because our view is that it has to be a non-discriminatory access process. We have to mimic as closely as possible the core principles of our Constitution, while recognizing that this is an elite environment of a commercial engagement, and that you are dealing with clearly well-resourced developers who understand their rights and who understand how to protect their interests. And by doing this, we are able to connect on a fair pari passu basis a small as well as a large developer on a fair basis.
Sure. Okay.
Thank you.
Thank you. I say I'd love to live in that world where everyone has a Rolls Royce or even a Rolls Royce bus, as it were. Kevin, just leveraging off your experience in managing quite sizable climate-related funds and getting your thoughts then on the two models that have been put forward, complementary models that have been put forward as being the best solution for South Africa to solve for the financing infrastructure gap. Just your thoughts on them and perhaps maybe the potential challenges that you're seeing them presenting, as it were.
Yeah, thank you, Fifi. Good morning, everyone. Maybe some background. The word blended finance was mentioned by the Deputy Minister earlier. We sculpt all our different funds on blended funds principles. So we are partially owned by the DFI in the Netherlands, FMO, and Sanlam. So that in itself shows the blended finance nature of our origins. And what we've done so far is we've gone to market to raise different funds with blended finance. So we look at renewable energy, we do water. More recently, we've been looking at green hydrogen. And then the best example I can use for today is the RTIF model. So RTIF is the Regional Transmission Infrastructure Financing Facility. It's a mouthful, which we launched earlier this year. It was born within SADC, was born within SAP, the Southern Africa Power Pool, where they've realized that they need support. And the financing vehicle that can really step in quickly is blended finance. So given our blended finance history and our ability to speak to the donors, our ability to speak to the first lost investors, and ultimately the commercial investors was very attractive to them. So we've launched this fund. And the primary focus initially is to look at interconnectors. So most people might not know that within SADC, there's still 3 countries that are not interconnected with each other. The best example I can give is NAM Power, or Namibia and Angola, no interconnector between the two, even though as things stand, Angola currently has about 1,000 megawatts of stranded electricity, which they can't deploy. Now, Namibia will fall over its feet to get it from them, but there's no interconnector between the countries. So we're going to use that as our first go-to market to show that blended finance can really be the financing solution in the grid world. So that will be our first focus. Second to that is looking at existing infrastructure, grid infrastructure across the Southern Africa power pool, including South Africa, where some grids are falling apart and they need support. So that really will be the secondary part of it. And thirdly is all new build, the discussions we're having today. But what it boils down to from our point of view, at least, is that private sector will need to step in big time to support. And that's where we believe blended finance can play an important role. And ultimately, I think that's what we need to talk about.
Okay. Yeah, we'll talk about it. And I'll actually open to the floor in just a short while if we can just get Mark's intervention. And a lot has been shared so far. But I was wondering maybe if you can also add to the area of the tariff structure. A lot of words and criticisms have been levied on the tariff structure so far as it stands, but just your thoughts on how we can work towards something that actually works in this new financing model that we're discussing.
Okay, good morning, everybody.
Good morning.
All protocol observed. Firstly, just a correction for those of you that are writing and will appear in a paper tomorrow. I'm not a member of the regulator. There are 9 members. I am the advisor to one of those board members, the full-time regulator member responsible for electricity, Mr. Nhlanhla Gumede, who would love to have been here today, but there's an electricity subcommittee meeting today, which decisions have to be made by the regulator. So he needed to make those decisions and had to
Thanks for
forfeit
the
this.
correction.
So, no, it's fine. It's just, I'm the guy up here everyone looks at and says, who's he? But if there's something wrong in the newspaper tomorrow, they'll all know who I am. So, so just to start, I think I've heard the word reform a lot today. And I think let's just, to put this into context, there's right now, as the Electricity Regulation Act stands, there's no need for reform. We can do all the things we need to do within the current ERA. I'll give you, and the problem is that since its inception in 2006, a number of core elements of the ERA have not been implemented properly. So for example, the ERA mandates the regulator to regulate, if you go to section 4, to regulate prices and tariffs. There's no mention of regulating revenues. So already that's the first structural element of the last 20 years that kicks into place. Because what's resulted from that is the MYPD methodology, which is essentially a methodology to regulate the revenues of Eskom. Firstly, secondly, the regulator is empowered to regulate licensed activities, not companies. So the result of that is you get a single price determination or a single revenue determination that results in Eskom getting a number, which it then internally allocates. And that process becomes fairly opaque. And as a result, and I'll come back to this, we just know that the NTCSA interim CEO only recently mentioned how that internal allocation affected the transmission division. In fact, maybe just let me mention it now. I think it's from financial year 2018 to 2022. We gave through its revenue application, we gave Eskom 44 billion rand. Only 19 billion of that actually got given to transmission. The rest got sent through to generation. So this is a big problem in terms of this vertically integrated utility that's operated and how that's impacted tariff setting and revenue determination. The regulator is empowered in terms of a number of sections, 4, 7, 13, 14, 15, for those of you that are interested, to firstly unbundle tariffs. So it requires us to issue separate licenses for each separate licensed activity. It also requires us to set efficient tariffs for an efficient operator. So there's an element of efficiency built into that. So so the ultimately right now within the ERA as it stands, we can set unbundled cost reflective tariffs. We can do it right now. We don't need to wait for the ERAB, but it hasn't been done. And then, I'm going to skip, I had quite a few notes, but I think the important point I've just made is that the NTCSA, small correction, Javier, NTCSA, but the NTCSA has been unbundled out of Eskom for a very good reason. It's one of the core reforms that have operated around the electricity industries in the world. The independence of the transmission system operator. And as you'll see in the ERAB, further separating that into independent market, independent systems operator, et cetera, et cetera. But now let's just talk about the transmission system, the TSO. It must be supported to have operational and financial independence. I've just given you the example of what happens if it doesn't have that. Money moves and we don't know where it's gone. And therefore it must be supported to make the necessary decisions to ensure that the operation of the transmission system is non-discriminatory. That's in the law. It's a non-negotiable. But also it's also mandated to make independent financial decisions that mean that it makes investments that are for the good of the grid and the use of the grid, not for the good of the shareholder. Because it remains a subsidiary of Eskom, even though it's been unbundled out of Eskom. So I think, we can set that tariff for NTCA as an isolated ring-fence tariff, which will ring-fence the revenues for that and ensure that the NTSA is a sustainable, viable transmission system operator. And then I just want to mention that two things. I can't go into the detail, but I sat in a meeting recently where some lenders have done some modeling, and they showed that if the NTCSA is properly unbundled, properly independent, it halves the risk profile compared to the NTCSA still linked back into the problems with the balance sheet of Eskom. That's a big number. What does that mean? Drops the weighted average cost of capital, and that translates into lower tariffs. So it's there's an efficiency gain from making sure we support and we nurture the independence of the regulator. And I think I'm just going to finish with this comment, that if that is the one consensus we get out of today, is that we support actively and proactively the independence of the NTCSA to carry out its licensed activities and its related ring-fenced in revenues and investments. We must from the outset ensure that the NTCSA has a healthy balance sheet. And in terms of that, especially considering we're talking about a lot of debt funding, from what I'm hearing here, from a national treasury perspective, that one area where they can support in this is fundamentally supporting the balance sheet of the NTCSA when they're looking at Eskom as a whole. But we need to start thinking of NTCSA as separate. It's a subsidiary, but it's a legally independent body. And electricity reform around the world has shown the importance of really making sure we make that independence robust. I'll leave it at that.
Okay. Quite a passionate intervention there. Any questions? Any thoughts from the room? There's a lady there with a maroon shirt, and then there's two. All right. Okay.
Good morning. Thank you, everybody. I'm Gail Warrender from British High Commission. I really wanted to come back to the last intervention and linking it to some of the others. I do think that we need to, I'm a bit worried as a donor and somebody who has good visibility of the levels of money out there, that we're pinning too much on the amount of guarantees and de-risking, as it's called, that we can get from the development partners, as opposed to de-risking that is real. And I think Mark's hit the nail on the head there with the fact that the cheapest and the best thing to do is, in the long run, is to really complete the unbundling and to get that transparency. Whereas I worry that there's going to be a reliance on credit vehicles and guarantee vehicles, and I've done a lot of them in my life. And that will be an excuse to park the reforms that are really needed. So I'm very conscious at the moment about the guarantee vehicle that everyone's talking about, whether there will be sufficient development finance to actually be the first loss element of that. You know, you're going to have to put that on other countries' balance sheets if you do that. And I just don't think we're going to get $16 billion of transmission grids via that route. So I just want to, you know, I don't want to be unpopular, but I want to diminish expectations because I worry an awful lot of energy is being put into that route. And I think blended finance vehicles and de-risking are great, but if you have a single risk, which is the governor of South Africa's ability to pay, you haven't really got de-risking. You've got risk transfer, but you haven't got risk diversification. And all of the credit vehicles that we've got that we look at, whether they're MEGA or whether it's infra credits or AITI or Africa Risk Capacity, and there are many of them, they all have a mixed bunch of creditors. They don't have a single creditor. So I am concerned about that. I'd love it to work. I think it would be great that we don't have to give, South Africa's government doesn't have to give guarantees, but I'm slightly concerned about pinning too much on that. But I think what is really important is to look at, you know, how do we long-term bring the risk down? And I think it is this unbundling. If I could just ask one question to Mark, though, in the short term, we'll still have the central purchasing agency within the NTCSA, and that has quite significant financial liabilities attached to it. So I'd be interested in his opinion on, you know, how he sees that as a risk for him as a regulator, but also whether we should be putting timeframes on really unbundling and spinning off the central purchasing agency. For those that aren't in the loop, the central purchasing agency is the one that needs to pay for the REAPs. So it's not a pure transmission agency. It has a multitude of activities.
Okay.
So if Mark had to come back, how does he see that as a regulator in terms of transparency and unbundling?
Mark?
Do you want me to respond now?
Yeah, sure.
It's very interesting you raise that question because I brought this up at the last event here, where when Eskom applied, it applied as a bundled set of licenses. We went back and said, no, we need 3 separate applications. Then we issued the transmission license, but we held back on the import and export and the trading license. Import and export's a bit of a weird one in the South African electricity regulatory framework because it's actually made up of things that you do in terms of a bit of transaction, a bit of transmission, and a bit of trading. But it's more a permission to import and export rather than an actual license. But I'm not questioning the act. I'm just saying it's a difficult one. So I'll leave that one to the one side. And the question we asked the NTCS is, why do you need a trading license? We've given you the right in your transmission license to buy and sell electricity, but not as a commercial activity, is what the Act says, but simply as a cost recovery mechanism to balance the grid. So you're not trading, you're balancing the grid. And we were told, no, we must have a trading license because of this whole issue of the single buyer office. We said, well, the single buyer office is not a licensed activity. So you can leave that wherever you want it. Eskom Holdings can still have it if they want to. It doesn't have to go to the transmission. But there was some there were some events and discussions, and eventually we did. But what we did was we only issued their trading license for 5 years, specifically because we were worried that as a transmission organization, its risk profile changes once you bring the risk of the trading onto the balance sheet of the NTCSA. So the CPA that's in the ERAB, as you say, would then become kind of the buyer of all of these legacy projects, and potentially any future state-sponsored project that they feel might need that level of guarantee. But it is a risk, and that's why we've put it in at 5 years, largely because if you look at the ERAB, it talks about 5 years from the ascension of the Act that this market operator and the system operator will be licensed. So by then, we should be able to be in a better position to see, and the CPA is a licensed activity, that as a licensed activity, does it need to stay within the NTCSA or does it move out of the NTCSA? Sure. But we can't predict that, and I can't comment on that because I'm not a board member. The board makes the decisions. But that was similar to where it came up last year. I hope that gives you some sense of, at least we understand your question. Maybe we don't have the answer.
All right.
So.
Okay, no, thanks for that. Can I get Kevin to respond?
Yeah,
And
if
then-
I may, just maybe, as I mentioned, we are fundraising for the Arts of Fund, and I get your concern about the guarantee. So we've gone to market. On the waterfall structure we have is the T3, as we call it, is our guarantee instrument, T2 is commercial investors, and T1 is first loss. We've been amazed to the amount of interest that we're getting from the likes of MIGA, the Swedish government, Afro-Exim Bank for the guarantee instrument. So that box is almost ticked. Second box, commercial investors falling over their feet to have a look at this because of the opportunity that it presents. So commercially, we can get this going. Where we are struggling, ironically, is to get the donors on board. So now the donor money is the most critical money because the amount of development work that needs to be done is immense. People don't think about the granularity of that. So what we need to go and do, of course, is look at huge parcels of land that need to be reconfigured to build new transmission lines. That, of course, needs to be done in accordance with the IFC performance standards, so the environmental costs. The list of items that you can stack into what the development needs will be are ginormous. So what I think we should focus about is how are we going to get development funding into the system so we can get going.
Okay.
Because I think, as I said, from a fundraising point of view, we're not that concerned about the guarantees because there is non-government guarantees available. It's more about the initial phases of getting development work done.
So Enos, I'm going to come to you, but I just want to go to Shakira real quick, just maybe to address some of the concerns around the true independence of the NTS. I don't know which one is worse, AFCFTA. It took me 2 years to learn that one, but the National Transmission Company of South Africa. I'm gonna say it full. So would you mind just addressing some of the concerns raised by a donor around maybe the full independence of the transmission company being an avenue to allay a few fears of capital, as it were?
Yeah, I mean, look, Fifi, this is not really my personal area of expertise.
Okay.
However, what I can say is that the ministry supports the full unbundling of the NTCSA. We also support the full operational and financial independence of the NTCSA. We understand it for the exact reasons that Mark has outlined, as well as Gail has mentioned in terms of how it changes the entire risk profile and addressing the real risks rather than, constantly looking for things to plug the gap. So that's what I will say on that particular component. I think the point has been very well made by Mark, and there's nothing that I have to add to that.
Okay. Any additions from you?
I think, Gail, I think when we had that, that session, because I remember you mentioned that point as well. So I think, those points are well noted, but I think, I think to your point, I think the issue of a completely unbundled NTSA is quite important. So I think that's what we're working towards.
Okay.
Because if we don't have it unbundled, then obviously the risk will increase. So obviously there will be much difficult to get that CGV working, the credit guarantee vehicle. So I think, hence, we are taking those comments into account with the World Bank. And then when we come back again in October, then obviously we can just see how that's going to be worked into the process of actually having an unbundled entity, because you also want to make sure that the NTCSA is also financially stable as well, and it being unbundled but also financially stable, because you don't want to have a situation where it's not financially stable. Then obviously it defeats the purpose of what we're trying to achieve as well.
Okay.
Thanks.
Ines, I'll take one last comment from you before we take it back to the floor for questions.
Yeah, this discussion about the independence of the NTCSA, the question of how the NTCSA actually funds transmission infrastructure brings me back to the comments of the model that we would choose for building transmission infrastructure going forward. So if we don't lean and leverage on the NTCSA's ability to collect tariffs, to extract wheeling charges and so forth from the market, and then use that as the basis for asset formation, we did link that and we separated from the control accountability of the NTCSA. I suspect that we introduce new risks in relation to the revenue model and how that would apply, and the new question emerges as to how we then separate the NTCSA from how assets are going to be built on the back of its balance sheet. So in our mind, the model for asset formation has to be absolutely correlated with how the NTCSA evolves as a business going forward. And therefore, the model question is, in my view, a little bit premature. until we have determined about the sustainability of the NTCSA itself.
Okay.
Yeah.
Okay. I think as Shakiri said, we spent quite a bit of time on this. So maybe we move on to another contribution that can help. So can I ask to take the gentleman behind you? Not because he's more handsome. No, I lie. You're more handsome. But because we have heard from you, and it would be great to hear from an outsider. Go ahead.
Great, thank you. My name is Ntumba Katabwa from the French Development Agency. So I just want to take a high-level view or a systems perspective in relation to distribution and transmission. We're talking about the grid here, but we're focusing predominantly on the transmission network, and how much of the benefits of the transmission reforms actually rely on successful debottlenecking and resolving of the issues on the distribution system. Because we are focusing now on transmission, putting all of our resources, our capital there, whereas we know today distribution is already broken as we speak. The two are coupled one way or another, even from an electrical point of view. But for these benefits to accrue on the transmission reforms, how much of it actually depends on successful debottlenecking of distribution? And if there's any current work being done on that and what the timelines could look like? It's an open question. Thank you.
Anyone keen to take that? How much of the fortunes of what we're trying to achieve in transmission is dependent on what happens in distribution? We can park it for now. Okay, sure, Neil.
When we developed the investment plan, when we had a municipal section as a portfolio, and in the implementation plan, we took that a bit further. And in the costing of the need of the investment required for just the part of the distribution grid that is managed by municipalities. I mean, it is, anywhere approaching 200 billion, and that would be not for renewable. I mean, that is just the maintenance backlog on the distribution grid. So I think the problem statement is maybe a bit different in terms of new transmission and maintenance on the distribution grid. And I suppose maintenance is going to mean very different things to different municipalities. In some cases, it is going to be just maintenance. In other cases, it will be modernization. And there may even be, some municipalities that is just going to have to, I suppose, secure their substations from vandalism. But, where I agree with you entirely is that, we do need to take an integrated approach. Because, I think separating the transmission from what's happening in distribution, from what's happening in generation is not the systemic approach that is going to be needed. But the problem statement, I think, needs to be identified as being different. But window 7 to succeed, we need transmission. Once we get those electrons onto the transmission grid, by the time it hits municipalities, it needs a working distribution grid. And I think we need to start thinking of it in that way in terms of the type of investments. The financing for distribution is I think, going to pose its own challenges in terms of the balance sheets of our municipalities, and which municipalities are going to be able to, do this without the necessary sovereign guarantees that are going to be required by the National Treasury.
Sure.
And if I can do a bit of marketing, we have a municipal conference, JET conference, that's coming up towards the end of August. It's about 900 delegates that are expected. It's going to be at Gallagher Estate.
Are we all invited?
Well, I'm not sure about all be invited, because that may take the number to 1,000. But I think it's going to be an important conference to start to unpack, how we overcome these various challenges, not only in terms of the financing, but also in terms of the capacity and capability.
Okay, Mark, I saw your hand up.
Yeah, it's just a small comment, just to give you a taste, and I can pick it up with you later. But what you've also alluded to is another fundamental problem with the improper implementation of the Electricity Regulation Act. For 20 years, the regulator has been issuing licenses called distribution licenses. But when you go to section 13.3 of the Act, it's very clear we must issue separate licenses for the permission to operate transmission, generation, distribution, trading, and import and export. But the distribution licenses have been issued with an inferred trading option built into them. So as a result, right now, every municipality should have two licenses: a license to run a distribution facility, which talks to the issues you're talking about, the real structural engineering issues, and a separate trading license, which enables them to run their retail business. And that because that hasn't happened, it's made it very difficult to understand what are the fundamental costs related to one side of the business to the other side of the business. And hence why the regulator lost the case in the Nelson Mandela Bay municipality matter, because of this inability to distinguish these different costs. And you'll see we just made a decision last week, I think it was, where two municipalities have been merged. And we've issued them with the distribution license with the letter to say, could you please apply for a trading license as well? And that will hopefully start to then unbundle at a municipal level, so we can actually start to transparently see where does the problem actually lie. Thank you.
Okay. I'm going to take one last question, maybe two. So sorry. The lady had her hand up before, and then the gentleman, and then we're going to go into closing remarks, but it's not going to be the end of the engagement. We'll continue with a facilitated round of Q&A, but please go ahead, ma'am.
Thank you. Good morning. I'm Carla Roosterboom from KfW Development Bank. I think given the kind of various comments we've heard this morning around how the cost reflective ring fence revenues for NTCSA is really on the critical path in many ways for and also recent media reports that NTSA indicate that they may be submitting a separate tariff application. Mark, I'd appreciate maybe if you could give us a sense of your understanding of when this could be in place. I mean, when are we looking at this kind of segregated revenue model? Thank you.
Would you like some time to think on that? Should we take another question? Yeah, let's take another question. Yes, sir.
Yeah, thanks. It's not a question per se. It's a comment. Donald, Department of Public Enterprises.
Okay.
Yeah. Firstly, I want to talk about the independence, because I think it's something critical that, yeah, when this process of unbundling Eskom started with the roadmap, what we envisaged was around this time we'll be done with the whole unbundling. But we realized that there are a lot of complexities and dependencies. Hence, you saw transmission going first. But we had to make that call as government. How do we approach this process? Because you had a utility that was heavily debted. So the debt relief that came, it paved way along the way to some to enable the restructuring itself. The current arrangement, yes, there is an element of doubt on the independence of the transmission, especially access to grid, but it's a transitional arrangement. As you are aware, the era which it's just waiting to be signed into law, is in Parliament. It went through all the processes, which gives the transitional arrangement for NTCSA to assume the role of the transmission system operator for 5 years, while you're still working on the modalities and everything. Inside the era, there is a chapter that talks to the fact that the minister, it was DPE then, but now DP is no more. The minister must establish the transmission company outside of Eskom. That is after we have dealt with, we stabilized Eskom, the debt, and it's able to operate meeting the condition that National Treasury imposed. So it's a long process. It's a complex process of restructuring this. And I've already had talks around the distribution, which is another ticking bomb as we speak. The area debt is around 80 billion. you're asking yourself, how are municipalities going to pay that? I'm glad to hear that there is a JET conference coming in along end of this month. So already work is underway to start looking at the distribution industry. But I just wanted to point out the fact that the restructuring, it's very complicated. It's very complicated, and a lot of lessons were learned along the way, which one of the questions was, why do you need a separate trading license for that? The license that was there was for Eskom Holdings. So as we unbundle and taking out the transmission as a subsidiary of Eskom Holding, to maintain that independence along the way, you had to get a separate license for the transmission. But hence I'm saying it's quite a complex and it's going to take quite some time than we anticipated, the restructuring of that. But we can say key milestones have been reached. Sure. And we begin to see the fruit of the toil that started 2021 with the roadmap. Thanks.
Sure. No, thanks for sharing that intel. Grove, I forgot about you, but I just remembered.
Thank you. I just wanted to go back to this very critical question of the effective unbundling of the NTCSA. And the reason why it's so critical, of course, is the financing of grid expansion, either by NTCSA itself or as a counterparty to the IPT model is critically dependent on its developing or growing a more viable balance sheet. So this is a kind of a question to the regulator maybe, but to actually all of us here, is I think we're missing the most important aspect of that question, and that is the financial guarantees that were imposed on the NTCSA, the upward guarantees that it provides to the holding company. So, you know, you can say it's illegally unbundled, but financially it's not unbundled. So really the NTCSA is not an unbundled entity. Sure, it's got a board and this and that, but it can't raise capital without approval from the holdings board, Eskom Holdings Board. And it provides upward guarantees to the holdings board. And that was essentially put in place by Lazards, who did that work on the assumption that that is what the multi and bilateral lenders, some of them who are in this room, would want. So if as a regulator, let me translate this as a regulatory question. If you are committed to pursuing a properly independent transmission entity, are you addressing this issue? Are you looking at license conditions? Are you from that point of view driving it? And it's also a question to perhaps other stakeholders in this room. We all say we want an independent transmission entity, but that's not really what we're getting, and we're actually partly involved in what we currently have here today. So the bottom line is we are going to have to find a way to create an independent balance sheet if we want an independent transmission entity. And I'd like to hear your views. Thank you.
All right. I think that we can actually go into some closing remarks for this session. As I say, the session coming up next is going to be facilitating a lot more engagements and Q&A amongst you. But we'll just wrap things up right now. Perhaps just, Mark, beginning with you in terms of your final thoughts, just addressing also some of the things that have come from the two speakers on the floor.
Okay, I think the two are connected, both what Javier said and what I didn't catch your name. Sorry? Carla said. And that is that it's a critically important issue of how do you actually secure that independence. From our perspective as the regulator, one of those is to make sure that we isolate, or let's call it ring fence, the tariffs, the setting of the tariffs, the fact that those revenues go. I think we all know how transfer pricing happens in the private sector, that the minute there's one subdivision is relying on income being transferred from another, there's already a constraint on that level of independence. But the reverse of what you've just said now is also equally important. I was made aware of it recently, but it's only because I was having discussions with people who are on the inside of that process and saying that option was on the table to actually settle some of that in a way that would not have those guarantees. So it's something I will take back to the regulator to say, look, by the way, there's a reverse element of this independence that needs to be, if I understood, it's a kind of a reverse to the revenue. This is the guarantees in reverse that we need to consider. I think the important thing is that there is also, from terms of this discussion, as I indicated earlier, the CEO, the interim CEO, had pointed out how this opaque transfer of funds had really undermined the ability of the transmission division to actually deliver the grid. Not that I'm saying 44 billion would have made the difference in terms of the numbers that have been given today, but it would have made more of a difference than it has.
Sure.
And that is that, once we ring fence the revenue flow, we then start giving some of the comfort that was alluded to earlier. But at the same time, as the regulator, it also then enables us to enforce that. We gave you X amount of money to build grid. Did you do it? Whereas at the moment, it's very, with that asymmetry of information, it's so easy to cover that in a way that looks like it's been done and maybe it hasn't, or maybe something's been defined as transmission, which wasn't. There's so many ways that asymmetry of information can play itself out. But once you've got it ring fenced, you can go back to the NTCSA and say, where did that money go? And they've got to be able to provide you with the evidence of that. But again, I go back to my key consensus takeaway from this, if we can. All of us need to support that board through some of these comments like you've made today, Javier, yourself, Carla. We need to support that board to really start robustly ensuring that independence is actually going to be real. Okay. So that we can then, all the spin-offs that we've been mentioning today can start to be realized. Okay. If that isn't done, then as Javier said, what have we actually got? Okay. Thank you.
Okay, point well received. Neil, your parting shots. I mean, right now we've been talking a lot about just the various avenues to raise the investments required, particularly for the transmission lines. You mentioned your conference coming up that's going to deal with the monies that will need to plug the distribution gap. But also, as you conclude, maybe just speaking to the just part of the equation as well, just to ensure that ultimately we are all beneficiaries of this. I'm talking about communities and broader society.
So I'll come back to the just part, but it does appear as if we're going to have to take a two-track approach with the amount of work that still needs to go into setting up the IPT or IPP linked from the regulatory side in terms of legislation, procurement, work on the cost reflective tariff. And in the meantime, I think the other track is how do we effectively deploy the concession loans that we've secured under the initial 8.5, which is now 11.6. And that's going to require exemption applications. It's going to require a pipeline that comes out of the TDP. And it's going to require the Treasury being prepared to provide the sovereign guarantees to Eskom holding, because the proper and full unbundling hasn't taken place. And I think that is what we need to be looking at as we undertake the important work that is still required around setting up the IPTs. On the just component, I think where blended financing, I think, can really provide an important contribution towards the just component, in that it can bring in these concessional loans, the highly concessional loans, and even leverage in grant funding, so that we don't think of transmission as just these lines that we are constructing, but also how does that also encompass some of the just components that we've identified within the JET IP.
All right.
Thank you.
Thank you. Shakira?
So Fifi, a few closing thoughts from on my end. Firstly, I heard the number of $15 billion being thrown around earlier in terms of the financing required for the grid. That was previously, and of course we had some dollar depreciation, etc. It's not $21 billion in terms of the quantum that's required. So we really do need to be looking to now implementing these solutions that are on the table. And as you know, the Deputy Minister also echoed this morning that we need to we need less talk about all the models, and we now need, the next time we come back to the JSE, we need to, as government, be saying, this is what we're going to be doing. This is when we're going out to market, and provide this private sector with some clear and credible timeframes. Secondly, I mean, transmission is costly and complex. It's not, as you've heard today, it's not just about, it's not just a financing challenge. It's also the capacity to execute, the capacity to deliver, which is where we are currently really struggling in the South African environment. So the models that we've put on the table really do address these to a large extent in terms of the speed and scale of delivery that is required, not just for energy security, but for the country's economic growth. Minister Ramokgopa always makes the point that the country's energy supply must lead the country's economy. And this is what we need to do. So we need to be speaking to the future. We can't be, doing things in the same way as we have been and expecting better or different results, as the cliche goes. And really, this is something that we need to take very seriously. We need the innovation that we need in the space. I think we also we need to bear in mind that it's not a static process. That in itself is dynamic and something that needs to continue to be reviewed. And related to this, the last point I'll make is that we also need our TDP to be one of the future. And what I mean by this is the way in which we currently conduct transmission development planning in the country is very different to global best practice. So TDPs in many other parts of the world, I cut my teeth in local government a very long time ago. And this was an instance where you had transport or housing, just doing things in a very isolated manner. And city planning was not necessarily taking the lead in terms of determining what those requirements are. Now, with the TDP, it's the exact same thing. In many countries around the world, you have either the regulator directly approving and detailed elements of the TDP, or you have, or a combination of the two, or you have central coordination agencies or ministries or that actually conducts oversight on that process, and there are various checks and balances in place. This is because of the huge fiscal implications of transmission planning. So I think that's something that we also need to take with us as we embark on this process.
Okay. Gentlemen, I've got 3 minutes that I actually don't have to share between you. So can I kindly ask that we work together in distributing this limited resource?
I'm going to keep mine very short. One, there cannot be any energy transition without transmission.
Sure.
I think we need to think, you're careful that we think too much of an isolated scenario, and we think more regionally. There will be electrons flowing from our neighbors in the future. There's no doubt about that. Lots of hydro from the south, from the north, and of course we'll be pushing renewables up to the north. And then a closing remark is, which I'm sure many might know this, but I recently read that for every chat GPT search that you do, it requires 10 times more energy than a Google search. Where is that power going to come from, and how are we going to transport it?
Drop mic. Inas.
Thank you. Sitting at the coalface, looking at how this gets done, two things. What are we solving for? We are literally solving for the aggregation of skills and capital to do probably one of the largest scale infrastructure builds that South Africa has ever witnessed. I don't think this is something we must assume exists elsewhere in the world, but South Africa must literally solve for that particular variable. And the revenue model, how we sustain that on a sustainable basis going into the future is very critical. Second, as a practitioner, as we come up with solutions and we think and we look at the room of decision makers and voices, there isn't a single voice, whether Eskom, Electricity Ministry, National Treasury, anywhere, the PCC itself, the roles of the various parties, there isn't a single point of interface that says, this is the position that represents the enabling environment for investment. So as we look at platforms, we also need a little bit of a singular and clear-minded voice about exactly where capital gets deployed. Too many voices in the room that create quite a lot of questions as to implementability. Quick wins, we can do collector grids now. There is very little that has to be done to implement. And I think it goes very far to lowering the macroeconomic cost of connection as we solve the bigger question of grid.
Okay.
Thanks.
Perfect. Mr. Ravish?
Thank you. I think the time for talk is over, as we all know. I think that's been the theme of the of the workshop today, of the session. I think what's important post this is that we need to get the 2 ministers and the 2 deputy ministers to literally contract the NTCSA board to ensure that they deliver on what's meant to be delivered. I think from an Eskom point of view, it's not a money issue that we know of. It's a matter of execution, and hence bringing in the private sector through the IPT boot model is the way to go. Obviously, there's still a lot of work to do with the CGV, the whole credit guarantee vehicle, the blended finance, but that work is going on in parallel. And by the time we go out with a full-blown tender from a treasury perspective, because obviously we are leading this, and it'll be very important that we get everyone on board, but to ensure that when we go out in a full-blown tender, that all these issues have been sorted out, the board is contracted, and we can then have a clear way forward in terms of actually delivering and executing.
Okay. Deputy ministers on the contract? No, I'm joking. I'm not going to do that right now. Mark, we are out of. Oh.
Supports this. That's where the jobs lie.
Okay. Okay. Perfect. Thank you. Thanks. Please help me congratulate the panel. Actually, thank the panel for the time, for their insights.
We are leaving, right?
Yeah. As Ravesh said, the time for talk is over, and my time for talk is over. At this stage, I would like to hand over to Steve Nicholas. Mr. Steve Nicholas, is he in the room?
Yes, we must. Yeah.
Nickel.
We have
Mr. Steve Nickel in the room. Yeah, to take over the rest of the facilitation. Thanks, Steve.
Yeah, thanks everybody for what has been a tremendous conversation. And I think what is noticeable for me is we're kind of replicating a conversation we had roughly a year ago here at the JSE. And I'm involved in lots of these conversations, and many of them are the same a year apart, right? Nothing seems to change between. But I have a very strong sense that things have developed and people are talking to each other, and it's very exciting. I also got a sense of strong optimism, but also a strong sense of consensus. It always worries me when we have consensus. I wonder if we've invited all the right people. But it does seem across a range of disparate groups that we have quite a strong consensus on the way forward. So what this session is really about is what do we need to help to accelerate that? So despite the optimism, I still heard a lot of things like, but it hasn't happened yet. The regulation exists, but we haven't done it yet. And I'm conscious that we're running out of time. And so I kind of, and I think Neil's comments about the short term are very interesting. The things that we need to do in the medium term that we've been talking about here, policy reform, pricing reform, they're not going to be solved in the next 18 months, right? And so what do we do in the interim? And how we get those concessional loans applied seems really important. So for me, out of this conversation, the critical path seems to be independence of the NTCSA, right? And full financial and operational independence with emphasis on the financial. Pricing reform. So the thing that was kind of implied but not really discussed is that the current pricing system does not allow people to recover their costs. And so you're not going to get long-term contracts with the private sector in that context, right? As I know the private sector. And then the last bit is unlocking this kind of short-term investment. So these for me seem to be the 3 things we really need to get right and very quickly. And so this session really is a discussion with you in the audience around what can we do collectively, what can we as the PCC do to help to speed up these conversations. So that's really just the framing. So we've got sort of 20 minutes or so really to get some thoughts from people on the floor. And we already have a first hand, which is very exciting. So yeah, think about what you would like to be seen done. There is a lot happening already. Is it happening in a disconnected fashion? How can we start to put some of these pieces together? So let's start at the back here.
Can you hear me?
Yep.
Okay, so my name is Alistair McMaster. I'm from the Eastern Cape Provincial Government. Yeah, and so I think there are quite a lot of local learnings at the coalface, granular lessons that we face, and that helps us to see forward about what's a short term. You said, Steve, how do we accelerate for for investment in the short term. And Kevin mentioned something really, really important. It was quite short, but it really needs to be amplified. And this is we're speaking about finance and sort of credit guarantees and so forth, but the donor support and technical support for project development is so crucial. I mean, if things can go to market in 18 months, the question is, will the corridors be developed in 18 months? And what we're seeing in the Eastern Cape, and we work very closely as the 3 Cape provinces, there's an alliance between the 3 Cape provinces, is that a huge pinch point is corridor development. We all stand back and think that the colleagues in NTCSA, if I got that right, are just handling this. They're busy working on servitudes and permitting and so forth. It is so much more complex than that. The devil's in the detail, and we deal with them on a regular basis. And they need, I've used this word before, a joined up government approach. How can we crowd in around supporting them? There's no ways that they are succeeding in land acquisition and servitudes without working with municipalities, without working with COGTA, the provincial COGTA, which is cooperative governance, municipal side, and traditional affairs. Because corridors actually do across land controlled by traditional leadership. The departments of human settlements, because many of these corridors have settlements on them, and I mean, if you want to talk about the just transition, there are real implications for people's lives who have to be moved. The Selgas, and so it goes. And in the Eastern Cape, we're trying to form these sort of support systems for NTCSA. All the permitters, the decision makers, and all those that can help unlock corridor together with Eskom. So we see Eskom as a partner that we'd like to work with. But the problem is that there are not enough human resources. And so this donor funding and technical support needs a kind of a human resource support for these delivery units, which we see as so necessary at a provincial and local scale. So that's what I'm putting forward is if there's going to be donor funding and technical support, we kind of need local NECOMs or local Vulindladas to bring all the fragmented pieces together, take all the pieces of the puzzle, put them together into something coherent. Only then will lenders pass the due diligence if they know that these corridors are secure in the long term. Thank you.
Great, thank you. Any other thoughts or people? There's a thought here. And James there. I can't actually see the people on this side. It's just a bright light.
Okay, thanks. Am I audible? Yeah.
Yes.
Thanks, Steve. And I think you've just spurred the thoughts that I was trying to process. I've heard about the financial models, the due diligence, but I haven't heard about I suppose it's the end chain of the value chain of cost recovery and the ability of, I think, government to recoup or recover the costs. So for the private sector investors, it would probably be the government guarantee. But maybe my question is the readiness of municipalities. That's where you got my attention. The readiness of municipalities to recover some of these costs from ordinary residents. I mean, we have some of the findings now about the big metros unable to recover costs, especially electricity costs. So where is that cost being turned on to? Is it national government? Where does the private sector get involved? Because clearly just planning it now, that's one of the risk factors that would need to be taken in consideration. And then the affordability ultimately of electricity in the long run. I think, and it's a lot of a circular economy thing going, the ability to grow the economy is very much dependent on expanding the grid and for people to be able to take up jobs and to be able to repay some of their basic service delivery costs. But I didn't hear it in any of the financial models. So maybe just some thoughts on that. Thanks.
So can you quickly introduce yourself?
Oh, sorry, Michelle Late from MISA.
Thank you. So I think a couple of points here, also from the conversations I had in the break. We need to be having the very detailed conversations that get down to this level, right? I think we have consensus on the broad mechanisms and approaches, and now we really have to get down. And I think a lot of the conversations are happening, but we're not all privy to the conversation. So one of the things that we try to do at the PCC is sort of connect everybody up that we know are working on this. And so these issues of justice and energy pricing and the role of municipalities, those conversations are happening, but they seem to be happening in a separate part of our political society. And so certainly we need to bring those in. But something that has struck us in the work that we're doing, so we're doing 2 projects that are complementary to this. One is actually pricing the grid investment that would be needed down to a very detailed level. And then the other is, and also thinking about where does that capital come from? So to your earlier question, we, from discussions with the banks and financiers, there does seem to be sufficient capital and sufficient tolerance in the capital markets in the short term. So we can debate what that is with Neil, but problems start to come in sort of 7 to 9 year timeline. And so we have some wriggle room now, but we need to get out ahead of that. And of course, the second project we're looking at is pricing reform. And the more we look at that, the more we get caught up in a conversation about municipal, financial, and business model reform. And we can't seem to get away from that. And that's a very complex topic. So the systemic issues here are huge. James?
Thanks, Steve. Yeah, great comments and work done today. So congratulations, I think, to everyone involved in the PCC. My comment is, as you said, there's, I think, good consensus here. So it's not probably about what's been put out. I think it's been very valuable. It's maybe more about what hasn't been referenced. I'm sure everyone is aware of these kind of issues, but just to, I think, worth just indenting at this session. The first one is more relates just to the actual transaction. So it does feel, we're looking a little bit at transmission in isolation here as from a financial perspective. So a lot of this work sort of seems to be sort of a little bit biased towards the structuring of a deal that's acceptable as perhaps bankable specifically to the private sector and including, international donor funds. At the same time, we talk about sort of natural monopoly, public good, network assets, but then talk about transfer of ownership and not transfer of termination, demand, credit risk. So, Ravesh, going back many years, so where's the other side of the value for money, public sector comparator, local TA skills to deliver this type of transaction? I kind of felt that I missed that balanced side of the transaction presentation. My understanding is probably TDP, the big corridor bill, the 765, that's about 96 billion. Just CapEx, if you had to put all the financing layers on top of that, you're into a well over 100 billion project. That's a mega project, just from a TA perspective. So where and how do we balance that? So it was a little bit, that was an issue that I felt needed a little bit more sort of in depth. The second one was just kind of talking about transmission, super critical, and I agree, no transmission, no transition. However, transmission is just an enabler. We've also done quite a lot of modeling work, and I think one has to look at transmission as an enabler of RE build, but RE build has to go hand in hand with coal. We've got a coal extension. What is coal closure going to look like in the future? But equally, what is our role? What does the gas to power program look like? Started in 2014. We still don't have a transaction in the marketplace. Base is well behind. And then very critically, as part of sustainable finance, the shift into market reform, which includes EDI reform. So these are issues which then kind of says to me that finance is not actually our constraint. If we look at the total system, we're in this massive reform, very big ambitions, trying to play catch up, but really capacity, bearing in mind we've lost kind of capable state institutions. So where will the capacity come to move all of these things at the same time in an integrated fashion? And then at the moment, we're facing a real affordability crisis. So we're pushing up against sort of affordability thresholds already at a societal level. But industry business, I think, is already sort of their eyes are watering when they look at what's coming. It would be good also just to kind of come back and reference the marketplace. So vesting contracts and legacy contracts are going to transfer cost, system cost, through the transition, through system use of charges to all users. So it's another aspect. It's almost, it feels a little bit unregulated. So ultimately, to get a hold on affordability, we've got to get a hold of total system efficiency. So where are we going to kind of get a hold on that? And that is not a transmission issue. So when we talk about establishing, new world-class vehicles and capacity to deliver and all these things, well, we've got vehicles, we've got, NTCSA, we've got ESA, we've got other ones, we've established one-stop shop. Why are we not making these entities work? Why are we not kind of getting the current state capabilities working efficiently and effectively? But yet, we're trying to start new. That's a concern, I think. And the last quick point is completely agreed, self-build collector grids. We've got to deepen and accelerate that because I think that really allows us to front load a much more responsive transmission development plan. So I think I agree, I like that. And then the ITP, as I said, a 100 billion plus project, clearly we're going to have a real big transaction structure to get that away, but that's going to take a lot of time. So that's a long-term plan. In the middle, what we haven't spoken about is the role of NTCSA and sort of network expansion as kind of traditional Eskom. They are the incumbent, they've got the most skills, they are there, they do kind of have access to kind of low-cost finance, and they are critical to the early works programs and kind of holding everything together. So I feel that like we really should be kind of carving out and highlighting what is that role, because it is a very critical role. Thanks, Steve.
Yeah, thanks. So just introduce yourself quickly, just so everyone knows you.
So James Mackay, CEO of the Energy Council of South Africa.
And just on your last point, so you're basically suggesting that the potential answer to Neil's question about short-term challenges is leveraging these concessional loans and Eskom's existing ability and skills while we're doing all of these big sort of policy reforms.
Steve, I mean, guys, we're talking about a network asset, public good. So when we start having to carve up around transactions and transfer of skills and ownership around financing, I think it becomes very gray very quickly. And that goes back to, yes, the big kind of corridors, we're going to have to make a plan, but it's going to take a while to structure those and get the right sort of structure around TA capabilities. In the short term, what do we do? Eskom, traditional Eskom capability has to play a role there because they have that whole platform. So how do we get visibility, clarity, and sort of supports the NTCSA to do the early works, lean into what they can do well and what they have capacity for? And then I think in that is a more flexible and innovative model that says self-build and how deep can you go into collector grids with kind of private sector build, but it's not a big kind of mega billion network asset with all of those complications around kind of financial structuring and risk transfer. So hopefully that answers. Thanks.
Yeah, that's good. Any other thoughts or comments? I want to, maybe because I see Ronald is in the room, so those of you who don't know, Ronald Murray actually works for the NTSA and leads a lot of the transmission planning work. And so based on what you've heard today, what practically can we do to help you, I guess would be my question. At the back in the checkered shed there.
Hi, it's Ronald Murray. Thanks for the introduction. I think what was mentioned here was key. A lot of our projects that we execute in the execution and financing side, we generally get right within a 3 to 4 year execution period. The big delay in time is exactly what this gentleman, sorry, I got your name, but I know Steve, is the acquiring of servitudes. Getting the land up front, securing that, making sure that that is secured well in advance. This is the biggest struggle. Making sure that you don't get land invasion and then getting people out of areas. Those are the real big issues that are delaying the major corridors. So the tariff is clear. The tariff is fundamental to everything. We need a tariff reform. We need good signals on the tariff to provide incentives of where to go in the grid or not to grow. We need clarity in terms of the market indication of what capacity is actually in the grid and what is not. I mean, my latest conversation is that the grid constraints is really about how much is already being committed to the grid. It's not about that we withholding, although it seems to everybody that that is the case. There is a lot committed in the grid already that advances the amount in time. So I think the ability to prepare all of those things in place enables the transmission to actually roll out. And I think the other is consistency. We've had the stop-start tariff adjustments, lack of tariff adjustments. If we can have increased consistency that we can get and increased consistency we can give to the market so that they can capacitate themselves in delivery. And I think that's where the big capability is, that the industry itself to actually physically develop these things needs to capacitate. And the way that we procure that, as well provide the localization, is critical in that area. I think those are really important areas. And the second is, I think we welcome the inputs. I mean, the TDP is not, the TDP is an input from the users of the grid, you know, who wants to use the grid, how much, by when. The renewable survey will be out soon. You know, so those inputs go into the TDP. How much load needs to be connected comes into the TDP. And we're encouraged that those volumes are clear, because what we don't want is to have more connected to the grid and have excess capacity, which then increases the prices as well. So we need to have a balance between what users want and what users want. So the collective input's really critical to have a critical TDP and get the financing through those areas. So I hope that helped a bit.
Brilliant, thank you. Okay, so I will wrap up from my side and oh, there's one more question. No, three more. Okay. You all have 30 seconds each. Mark and then Kove and then.
Hi, good afternoon again. Just something I didn't get a chance to touch on because we're under a lot of pressure, but I've heard the word reform around the tariffs mentioned a couple of times, and then Kove in his presentation also mentioned about the skewed way that tariffs are being applied. And two of the things that came out of the preparation for today was, you know, if the regulator does its job properly, we should be technology/ownership agnostic. Shouldn't matter to us who owns the infrastructure or what technologies use. Our job is to make sure the tariff is set correctly and that you're given a license which has conditions to make sure you do the job properly. So that's the first point. The second point is, in terms of the tariff itself, one of the things that's being considered and will be investigated. So it's not a decision at this stage, but we'll go through it, into stakeholder discussions, is the idea of moving away from a distance-based transmission tariff and make it a postage stamp transmission tariff, where your differentiation in your tariffs is simply the voltage and load factors. That's what will differentiate your tariff. And that should lower the playing fields for everybody, whether you're private or public. That will improve the access to the market, which is where you really want the competition to take place. But then it comes back to making sure you set that tariff at a level that attracts the investments, but it's not determined by anything other than, delivering a good transmission service. Thanks.
Excellent, thank you. Kove and then Carla.
Thanks, Steve. Two very different points. Firstly, even though we have robust debates about these issues, I think we all agree that we express huge appreciation to Ronald and his colleagues for the immense work that they do. I think without their incredible commitment and ongoing efforts, we would be in a much worse position than we are. And I think we all appreciate that. So, yeah, I think it's important to just acknowledge that. I want to make a very different point from this one, and that is just to come back to the collector grid issue, Steve, and your question about what can be done in the near term, or to kind of, Neil, I'm not sure if I'm using the right term, near term or short term, but from what I showed there in the presentation, and just picking up on some of the other comments that were made, the actual adjustments to make it possible to have more viable and make it easier for the private sector to initiate and lead collector grid infrastructure is quite easy to do. It's shortish term. So and given the importance that, I mean, we all people in the industry are very aware of many players that are currently doing engineering studies, grid design studies, they're doing this work. And I think the point was made by someone about the economics of, I think, INOS, and INOS isn't paying me any kind of special commission for making these points, by the way. It's true, there are network economics. We want to explore this model, and I think we should aim to also achieve some of these models, the implementation of some of the collector grid options, and use some of the JETP money to support that in a blended finance structure. So we should think as a dedicated work stream, somewhere establish a work stream that drives this, because that's half of the problem that we have to solve. It's not just the deep grid. Thank you.
Very good. And last points from Carla.
And then I guess it's a question for Ronald. Ronald, I understand the TDP is currently being revised. To what extent will the ideas discussed here today be reflected in the new TDP? Is there kind of an attempt to try and identify which parts of the plan will be delivered through ITPs versus through NTCSA itself? Just be useful to understand whether the plans now are also going to reflect some of these models. Thank you.
Neil wants to quickly say something. Ninos? Okay. I'm getting stressed about time now. I know how difficult your job is. Okay, 10 seconds.
5 seconds. Now to pick up on Javier's to pick up on Javier's point. I mean, I think that the Ministry of Electricity and Energy should convene that work stream that is going to need to look at the short-term solutions. So maybe Deputy Minister and Shakira, that is what I was signaling to you.
Was it? Okay, that's what this meant. Okay.
Yeah, Steve, in the work that we're doing on the backbone, so the high voltage grid and on collector grids, you know, the dedicated connections, and the precision that we're bringing to that information, we deal with a lot of global players in that space. And what consistently comes through, and this is to, you know, the Energy Council head's point, James, is that Eskom is considered a leading operator of grid. And so if we're going to do something drastic, incremental, and that recognizes the scale at which we need to actually operate as a country, which is unprecedented in terms of infrastructure, I think it would be a grave mistake not to take the good that is in our foundations and build on top of that. 10 seconds.
I think it was an excellent point. And I actually remember from last year, this event last year, there was a representative from China. And his point was, if you want to learn things about how to deal with grid management and disruptions to generation, you come to South Africa. Right? We are the best at it, you know? And so, yeah, I agree with you. There's strong foundations, and I am constantly reminded of that. I know we talk about skills challenges, but when we meet like this, I think we've got all the skills we need. We just need to be talking to each other. So I think the critical path that I've extrapolated from our discussions, we need to have this detailed conversation about short-term network economics and how we get the funding going. There's been a request for the ministry to facilitate that, really getting into the details, you know, how do we solve the specific problems? Independence of the NTCSA, we all now have acronym trauma. Which order do we put these things in? ITAs, NTCSA. Pricing reform / adjustments, the mechanisms for that reform are really in place. The distribution problem is huge. We need to really be thinking about that and starting to engage with that. And then this very specific challenge that Ronald and our colleague from the Eastern Cape government raised around servitudes and how we unlock those very practical other end of the spectrum things are very critical. So thank you, appreciate it. I'm going to hand over to our Executive Director, Crispian, to close us out. Thank you, everybody.
Thanks. Yeah, great session. Well done, Steve, and well done for your spot-on questions, everyone. So, you know, you've heard a real amount of excellent information and sharing this morning. And what is remarkable is the extent to which there is broad commonality on all of the big picture stuff. So, you know, Deputy Minister Sarupen this morning sketched out the economic headwinds that we're going to face as the global trading system starts to put a carbon price into it, and how we need to quite aggressively decarbonize if we want to stay competitive with our products. And we know that to decarbonize, our big priority is the energy sector. It's the bulk of our emissions. And we've got to massively ramp up low carbon energy sources onto the grid. And we cannot do that at the right scale without a huge expansion of grid infrastructure. The Eskom Transmission Development Plan talks about 14,000 kilometers of transmission lines, plus all the transformers and everything that goes with it. And we're currently delivering less than 10% of the pace that we need to do that over 10 years. So, you know, Enos earlier said we're trying to solve for the problem of the aggregation of skills and capital. And I think that's a very nice, crisp phrasing of the problem statement. So it's not just a finance constraint, it's also a skills and capacity constraint. And, you know, you've all broadly sketched out what the core solutions are to that. And central to this whole puzzle is the NTCSA. And I think there's a collective eagerness for it to be operationally and financially independent. We've also heard a lot about new models to bring in finance and capacity to work in conjunction with the NTCSA. And there's clear convergence around the sort of the IPT model, the build and operate transfer. And I think, you know, well done to Shakira and the Treasury people that have all been sort of pushing that model forward. And I think what the Meridian Crutham paper did was really add a very important second part to that, which is, you know, this idea of an IPT-backed grid collector model that works in concert with the more, should we say, traditional IPT model. It's hard to say traditional because we still haven't done it yet. So, yeah, I mean, and, you know, I think we're all clear on the core reforms that we want to drive that. So the Electricity Regulation Amendment Bill is on its way to being signed. I was really encouraged by Mark's comments earlier that, in fact, most of what we've been discussing we can do with the existing Electricity Regulation Act. We don't need the amendment bill to make it possible. It's very encouraging, you know, what Eskom's already done and the Department of Public Enterprises in setting up NTSA, getting the board up and running, getting the management in place, and the existing work that, you know, all of the staff of this company are starting to run. And I think what Treasury is doing, I mean, we didn't really have a time to delve into it. But the work that Treasury is doing on thinking through these contingent liabilities and this, you know, this endless request for a state guarantee around all these large infrastructure projects, the solution they're cooking up with the World Bank, I must tell you, is absolutely groundbreaking. And at some point, we need to dig a little bit more into, I mean, when you guys are ready, maybe after the next World Bank mission, I think it would be really useful to explore that in a little bit more detail, because, you know, even though it's being driven on transmission, it's got a much wider application, you know, water sector, other energy sectors, municipal sector. I think it can do a lot in terms of the broader infrastructure rollout. It's also really encouraging that this IPT office is getting up and running. We had the CEO of the DBSA here earlier, Boitumelo. She's been playing a key role. I mean, I know the ministry is driving this thing, but DBSA has been doing a lot of the support work in the background. And I really want to thank Mark Bear for, sitting through this discussion. The role of the regulator in making sure that our transmission tariffs properly price in the investment that's required and allow an adequate return, fundamentally important. And, I heard, what I heard from Mark is that they clearly understand that. I didn't hear him, Javier, sign up to your ex-post cost regulation proposal. So maybe that's a further area for discussion, but we're, I think, broadly understand the problem that we're trying to solve. And it was fascinating, Ronald, to hear you talk about the issue around servitude. And I did want to just throw one little pebble into the pond. My old mate Bernie Fanroff used to run the Square Kilometre Array. And what they had to do with the SKA was do a mega expropriation of servitudes, all linked to the SKA. And they had a really efficient operation that was able to turn this around in record time. And maybe we should borrow a leaf out of the SKA book in terms of how they did that. I know Bernie is now been for a couple of years driving the Steel Master Plan. And he's been very interested in this conversation because, of course, as the point was made, this has also got a huge industrial development component. So, gearing up our iron and steel industry and all of the manufacturing that supports this huge rollout is fundamental to getting the real economic benefits of what we've been talking about. So that's it from my side. I'm not going to, I'm sure I've missed out some really important points, but those are just some take homes that I gathered from the conversation. I do want to say a few words of thank you. First of all, thank you to the JSE for hosting us. Very generous. They did this whole thing for free, and it's part of their commitment to the issue that we're discussing and their view that it's so nationally important. I do want to thank the two deputy ministers, both for their really eye-opening inputs this morning and for sitting through the whole of this conversation. You don't often get that from the ministerial class. So it's really appreciated. And it's good to see, the GNU in action. And, we're looking forward to the new sort of, vuma that you bring into these very important policy debates. I do want to thank Meridian and Crutum and the funder that put the money behind the report, which is the African Climate Foundation. I think it's a really eye-opening report. I learned an incredible amount. Maybe not everything you've proposed was agreed, Javier, but this is an area, I know you're a fearsome lobbyist for many of your views. So we'll keep pushing on some of these reform issues. I do want to thank Fifi, who Fifi, I've always loved your various radio programs and iterations, and you were such a great facilitator today. So thank you for doing that. And there's also a big PCC team who've made this all possible, but I never normally do this. I do want to single out Simpiwe, who has been driving this event and doing all the thinking behind it. And of course, to all of the speakers and the panelists, you were great, and to the audience, there's a real sense of collective commitment to the agenda that we're pursuing. So thank you very much. There's lunch outside, so please join us and have a bite.